things, three basic issues which are coming up on this thing. One is that, people are still saying that they have been charged GST on top of discounted MRP. And this is happening particularly both on the online market and the offline market. We've seen this through the Diwali sale, and we continue to see this, that e-commerce sites are discounting a price and then charging you a GST on that, which is illegal actually, one. Second, people are still paying for goods as per old MRP, which was pre-GST MRP, because that stock is still in the market. It is still at the retailer's end. There's a third category, which of people which we found out, who was saying that even after this 28%, some items have been, 200 items have been moved from 28% to 18% or even 5%. The benefit of that will take, anywhere between 1 month to 3 months to pass on to them, because the supply chain is still has old material with old MRP. And this is where, again, you have a process problem. The government has taken these items away from the 28% slab and reduced them, but they also need to send a notification through the legal metrology department saying that the old MRPs on these products, how do they restructure or put labeling on it, which is lying in the supply chain, so the benefit can pass on immediately to the consumer. Yes, Shirin.
Okay, so those are some of the key highlights there coming in from the local circles poll conducted by Yatish Rajawat and his team. 53,000 people responding to that survey. Very quickly, in 10 seconds, Yatish, what is the one demand that the poll is showing up? What is the one ask that people have, especially when it comes to input tax credit?
So, this is the interesting part of the whole exercise. We are still asking, we are still trying to match billions of invoices with billions of transactions. And that is delaying the whole process of reconciliation, and it's affecting liquidity of the small businesses. So they're saying that allow us to either self-certify that the input credit, or allow a chartered accountant to certify it that we are the right claimant for this input. And at the end of the year, you can reconcile this difference if there is any, which is whether I have to pay more or you have to pay me. Now, this is something that goes philosophically, that do we really trust our businesses, or does the government really trust these businesses to pay their taxes and will allow them input credit on self-certification? This is the biggest ask at this point in time, Shireen.
Okay, all right, Yatish, we'll have to leave it there. Appreciate you joining us here on CNBC-TV18. Those are the highlights of the local circles poll. This was, of course, conducted across 100 cities, 53,000 people responding to that poll.
And more from GST. India's top consumer goods companies expect the lowering of the taxes by the GST Council to drive volumes going ahead. They are bullish on growth and recovery in the second half of FY18. Priya Sheth brings us this report.
Business seems to be bouncing back for FMCG companies post-demonetization and the transition to GST. In fact, top FMCG companies that we spoke to said that they do expect a pickup in demand after the recent decisions by the GST Council, and they do expect the second half of this financial year to be much better than the first half of this financial year.
I think the short-term pain from demonetization and the implementation of GST is definitely over. I think the second half will definitely be much better than the first half in terms of GDP growth, and I expect we are on an acceleration path in terms of GDP growth now onwards.
In terms of volumes, how would you view the trajectory of volumes?
Well, volumes will grow. I think most of the growth will be through volume growth.
I think this 10% reduction from 28 to 18 is a big reduction. And I definitely think that it will spur demand, it will increase consumption, and it will provide opportunities for the FMCG industry to grow. Currently, the industry is growing in single-digit terms. But with this, hopefully, the growth rate will increase.
So do you think the second half of this financial year will be better than the first half? And do you think that volumes should bounce back in the second half of this year?
It will improve, but it may take a little longer for it to really show all the impact. but definitely compared to the first half, the second half should be better.
And when do you think volumes would bounce back to original levels?
It's difficult to guess, but anywhere between, I think it's a continuum. You know, every quarter we'll start seeing impact in the next 1 year, I would say.
If you think about this quarter, we've seen just under 6% volume growth. And if you think about it, the first month was a highly muted month, which was almost flat. So the second month and the third month have been reasonably good. So we hope to see, high single-digit volume growths as we go forward. But we don't give any, future outlook. So I'm not going to give you a number for that. Right?
But in terms of timeline, can we expect FY18 or early FY18 to be when volumes will bounce back to sort of original levels?
Fingers crossed. Fingers crossed. We haven't seen double-digit volume growth for a very long time.
However, one area of concern that still remains is the wholesale channel, and that FMCG companies say may take at least 3 to 6 months to completely recover. And that's a space that they will continue to watch out for. In Mumbai, Priya Sheth.
Well, that is the feedback from the FMCG sector. But coming up on the program.
Now that we have Nandan as the chairman, we can all sleep well.
Infosys founder N.R. Narayanamurthy says all is well with the company and he would leave the job of finding the next CEO to Nandan Nilekani. More when we return.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I thrash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18. Profit from the emerging trends in the derivatives market and hedge yourself against volatile markets as we give you an update on the derivatives space. Murugappa Group presents Futures Now. Throughout the day, only on CNBC-TV18.
Presented by Murugappa. Together, let's progress.
They're sharp. They help you get the maximum value for your money.
I can hold on for the next growth will be phenomenal.
Buy with a stop loss of
it is positive for the stock.
It's a
marquee stock
actually. I
would possibly wait for the next.
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from S.P. Tulsian, Prakash Diwan and Ambrish Baliga. Every day on CNBC-TV18. CNBC-TV18 Market Wallas.
Well, tech bellwether Infosys seems to have put the days of upheaval and controversy behind it. At least that is the impression one got when the founders returned to the Infosys campus for the Infosys Science Foundation Awards. Remember, this is the first time that they're all back after the Sikka saga. Rukmini Rao and Arundhati Ramanan get you all the action.
A beaming N.R. Narayanamurthy walked back onto the Infosys campus to be greeted by his old friend and co-founder Nandan Nilekani. And it quickly became clear that Infosys had returned to the days when the founders and management saw eye to eye and reveled in friendship, mutual admiration and trust, characteristics that had faded into the background for a large part of 2017.
Absolutely all is well. Remember in my speech to the investors, I said now that we have Nandan as the chairman, we can all sleep well. And he is a very organized person. His strength is simplification of complex ideas. And there were lots of complexities, and therefore he has his hands full. So let's leave it to him, and let's all keep quiet so that he does his job well.
Mr. Murthy has been the custodian and steward of this company for the last 40 years, and we all look up to him greatly and believe that we'll always seek his advice and counsel to make sure that Infosys stands up to the highest standards.
Narayanamurthy, who had originally expressed concerns over corporate governance and management at Infosys, seemed visibly at ease and confident about the road ahead for the company. There was no sign of the disappointment he had expressed a few days ago when Infosys, under Nilekani, gave a clean chit to the company's $200 million acquisition of Israeli technology firm Panaya without disclosing the details of the external investigation. Murthy also reinforced his confidence in the abilities of the new board under Nandan Nilekani in finding a strong CEO.
I think having been a good CEO himself, he knows what is required, so there is no need for advice from anyone.
The hunt for a new CEO, of course, is still ongoing, and Nilekani says the search committee is working on narrowing down its list. With Rukmini Rao in Bengaluru, in Mumbai, Arundhati Ramanan.
Well, that's the latest from Infosys, but let's now shift focus and tell you how it was on Dalal Street today. It was day 3 and markets continued their downward spiral. Unfortunately, all sectoral indices ended in the red today. The Nifty saw a sharp fall post 2 p.m. It broke the 10,100 level, but saw a sharp recovery and managed to close just 69 points in the red. Meanwhile, Sensex closed 180 points lower. Mid-cap index underperformed further with a fall of over 1%. But bank stocks saw a relative outperformance with a 0.25 percentage fall. Anuj Singhal now joins in with a wrap of the trading action. Anuj, can we expect more downside risks in the next couple of days?
Well, another bad day for the market. Let me just put some stats here. It's an 8th successive day of the Nifty making a lower low and lower high. It's now corrected 350 points or 3.5%. And it's trading below the 20-day moving average and just above the 50-day moving average. India VIX, the volatility index, which is a gauge for the market fear, is up 7% this week and 16% for this month. And India is among the worst performing market this week. We had some big losers like Sun Pharma, Hindalco, Vedanta, Bharti Infra, Lever. But really, the talking point today was the big sell-off in ADAG names. Reliance Communications, of course, starting it, but Infra, Capital, Reliance Naval Defense, Reliance Power, all of these stocks. So where is this market headed now? If you ask me, if I go by the anecdotal evidence, this market is now very close to a hugely significant support mark of 50-day moving average. The India VIX is very close to an important resistance mark. Last time it topped out somewhere around 15. And normally, this kind of fall in ADAG stocks is an indicator of bottom formation. Also, the money market has been stable. So it's been a tradable correction in a bull market, but we could be very close to a bottom and the market reversing from here.
All right, Anuj, let's see what Thursday, Friday brings for us. Meanwhile, after government's 2.11 lakh crore rupee recap plan for public sector banks, we now learn that the government may advance next year's capital infusion in public sector lenders. To this financial year, Sapna Das, who broke that story earlier today, joins in with all the details. So, Sapna, tell us, what can we expect in terms of recap for public sector banks?
Well, clearly the indications are that that the government would like to prepone whatever is available under the Indradhanush plan of 10,000 crores for FY19 to FY18. So that's the first one big development. Of course, the proposal is in the pipeline and there will be certain approvals that will be required, possibly also not from the parliament during the time when they present the supplementaries. So that's one. The second also that we understand possibly the first tranche in terms of the recapitalization bonds, the quantum may be anywhere 70,000 crores upwards. So that's a big number coming in there. Of course, there are enough indications, probably indicating that the government would like to start the issuance of the recapitalization bonds sometime in December itself. So well within the first calendar. Well within this calendar. Last but not the least is also an action plan that's ready from the government. The approvals are already in place. Basically, nudging banks or basically encouraging them to tap the markets, possibly QIPs, FPOs, whatever may be the tools that they would like to adopt. Anywhere between 1,000 to 2,000 crores is something that the banks would be tapping sometime starting December, January onwards.
All right, Sapna, thanks for that. We need to slip into another break. But up next, Delhi Chief Minister Arvind Kejriwal and his Haryana counterpart Manohar Lal Khattar finally meet and decide to combat the pollution hazard. What happened? We'll tell you when we return.
I bring you the news that moves the stocks, from new drug approvals to patent challenges to the US Drug Authority's decisions to earnings analysis as it happens for Indian pharma companies. I put the news in perspective with actionable insights. I'm Ekta Batra from CNBC-TV18.
Profit from the emerging trends in the derivatives market and hedge yourself against volatile markets as we give you an update on the derivatives space. Murugappa Group presents Futures Now. Throughout the day, only on CNBC-TV18.
Presented by Murugappa. Together, let's progress.
They're India's wealthiest, the most elusive class. They're only 1% of 1.32 billion Indians. And they hold 58% of the country's total wealth. You know them, and yet you don't. They are India's elusive A-class. We took a look inside their minds in a first-of-its-kind study, the Affluent India Media Consumption Survey, powered by Cogent USA, conducted by Market Strategies International. Through 7 months of exhaustive research, 500 hours worth of response data with nearly 1,300 affluent Indians, and found out how they consume business news, what they watch, what they choose. Over 70% of them chose CNBC-TV18 amongst their topmost choices for the quickest to break news, the best stock recommendations, the best analysis, the best research team, and the most credible anchors across all 8 parameters. 98% of affluent investors watch CNBC-TV18, the channel of choice for affluent India.
Delhi's Chief Minister Arvind Kejriwal finally met with Haryana's Chief Minister Manohar Lal Khattar earlier today. The two leaders discussed issues related to the smog nightmare that has engulfed the NCR. During their hour-long meeting, Khattar and Kejriwal focused on major concerns like crop burning and vehicular pollution. After the meeting, Arvind Kejriwal said that a collective leadership is needed to tackle the issue of air pollution, while Haryana's Chief Minister added that smog menace in Delhi is a common concern. At a time when Delhi is facing one of its worst environmental crises ever, an RTI reply has revealed that AAP government has not been able to deploy its cash pile that was meant to fight pollution. The state, which earned 787 crore rupees from the environment cess during 2015 to 2017, they spent a fraction of that, under 1 crore. Just 93 lakh rupees were spent in 2016 and none so far this year. However, the Kejriwal government claims that it was planning to use the green cess collection to purchase land to build depots and buy 2,000 buses in order to strengthen public transport system. A quick look at some of the other national headlines we've been tracking. The meeting of BJP Central Election Committee has concluded and the list of candidates for Gujarat poll has topped the agenda at the meeting chaired by Prime Minister Modi. But the party said that the details will be revealed at the right time. Meanwhile, the Election Commission has barred BJP from using the word Pappu in Gujarat in its campaign advertisements. In a dramatic twist in the Sheena Bora murder case, Indrani Mukherjee has alleged that her husband, Peter Mukherjee, may have been responsible for her daughter's disappearance and death. Indrani has also said that Peter was motivated by greed. In the global arena, in what appears as an attempt to overthrow the incumbent government, Zimbabwe's military seized control in the country's capital, Harare, but the military denied a coup and called it a targeted assault on criminals around President Robert Mugabe, who were causing social and economic suffering. It, however, assured that the 93-year-old Mugabe and his family were safe and sound. Well, with that, we've got to wrap up this edition of India Business Hour Plus. Many thanks for watching. We'll be back tomorrow, same time. From all of us here, good night.
The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips, you could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell, presented by National Stock Exchange in association with Fine Cure Pharmaceuticals, Escorts, and Biba.
Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times. Only on CNBC-TV18.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times. Only on CNBC-TV18.
Commodity Champions, brought to you by Nakshatra Diamond Jewelry.
They're sharp. They help you get the maximum value for your money.
Target should be 2
I can hold on for the next
Growth will be phenomenal.
Buy with a stop loss of
It is positive for the
It's a
stock.
marquee stock
actually
actually.
valued
I would
stock.
possibly wait for the next one.
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from S.B. Tulsian, Prakash Diwan and Ambrish Baliga. Every day on CNBC-TV18. CNBC-TV18 Market Wallas. This is TV18 and you're watching CNBC-TV18.
Obviously caught our eye and a lot of people's eye. Is this all because of the Federal Reserve deleveraging, or is this really a global story because you've got nearly $20 trillion on the books of the big four central banks around the world?
Yeah, I think it's more of a global story, Brian, and always has been for the past 5 or 6 years in terms of credit creation. You know, the credit cycle's peaking, in my view, which means that central bank support in the form of ultra-low interest rates and extreme amounts of quantitative easing that you just mentioned, it's becoming less accommodative. And I think an important key to asset prices and profits has always been the growth rate in credit, not just in the U.S. but worldwide, including China, and even that's slowing down. You know, I'm not supporting a bear market, but sort of a market where you move into an old age retirement community and the pace of activity and prices behave more maturely. And so I think the sort of the halcyon days are over.
And to be clear, because you are obviously known more of as a bond person, but now you can kind of do what you want. You've talked more about stocks the last few years since moving over to Janice Henderson. You're talking about the U.S. stock market reaching a potential top, correct?
I am. You know, I think other global markets are more appropriately and fundamentally valued, Europe, for instance, and some emerging markets. But I think the U.S. is ahead of the pack, so to speak. And again, not that you know, things are going to go down precipitously, but I think we're basically at a peak. Maybe it's a permanent plateau. Remember that one in 1929? But in any case, I think the double-digit increases are over simply because the credit cycle itself is pulling back. The Fed's raising interest rates. The Fed is reducing its balance sheet. The ECB is going to reduce its balance sheet by half and ultimately raise interest rates. And so, you know, these are slight negatives that argue against a continuing bull market.
We've talked in the past about this flattening yield curve, and I don't want to get too in the weeds. Obviously, that's the difference between the 2-year and the 10-year. It is flattening. It's not inverting. It's flattening. We've talked on CNBC today extensively about the junk bond market as well. Is there anything that you're seeing in the bond market that could be viewed as a warning sign, a siren, a bullhorn, whatever it is, for equities, Bill?
Well, nothing quite yet in terms of developed market and government markets. As you know, they've been relatively stable for a long, long time, although the Fed is raising short-term rates and that curve is flattening. I do think and agree to some extent in terms of corporate debt and mainly junk debt. It's confined at the moment to telecoms and to companies in that area. But junk bond spreads are widening, and sometimes it's an early indication of equity prices. Usually the two move together. The correlation historically has been that the stock market moves 4 times as much as the high yield market in terms of price. And at this point, the stock market is only 1% off its peak, and the high yield market is about 3 or 4% off its peak. So it's simply gone the other way. But yeah, I'd look at the high yield market as an early indicator.
Every day we seem to get, by we, I mean the country, we seem to get a new headline on what may or may not be included in any kind of a tax bill. There's been talk about, you've heard this state and local deduction, which could hurt municipal bonds. There was a story out today that Build America bonds, which I know you and I have spoken about the last few years, maybe sort of zeroed out under this new plan. There's a lot of different stuff going on. We have no idea what the end result is going to look like, Bill. So how do you manage a portfolio given all these not conflicting but sort of wildly varying headlines?
Yeah, it's certainly very difficult short term. We don't know what's going to be included in the midnight hour, so to speak, with K Street lobbyists doing what they always do. But I'd say simply that it appears that the deficit over a number of years will increase by $1 trillion or so, and that most of the benefits go to corporations, and that's fine for stocks. It increases their bottom line profits, but not to individuals. And one important point, I think, Brian, but this is a long-term important point. Capitalism depends upon consumers. That an economic system, the best of which is capitalism, basically provides goods and services through the pricing mechanism to consumers. But consumers haven't been getting a fair break. Their real wages, as announced today, are up only 0.4% real over the past 12 months, and over the past 5 or 10 years basically flattened. So without consumers, without tax breaks going to people as opposed to corporations, ultimately capitalism fades.
Yikes. We're going to leave it on that. Bill, we're going to get you back on. We're running out of time today, but capitalism fades, the last 2 words. I'm sad now. Bill Gross of Janus Henderson, we appreciate you joining us. Thank you very much.
Thank you.
All right.
21st Century Fox holding its annual meeting today, and with a possible takeover from Disney and on the table, control of the company is a key issue. Julia Borson joins us now. Hi, Julia.
Hey, Melissa. Well, the Murdoch family will not lose its voting control of Fox. Fox announcing that a proposal to eliminate its dual-class stock structure was rejected. That protects Fox's share structure, giving the Murdochs about 40% of voting power, despite owning only about 17% of total shares. At its annual meeting, Fox announcing that all of its proposals were approved, including electing its directors and improving compensation. The company will report the number of votes after the meeting. A meaningful number of votes for share restructuring would indicate frustration with the Murdochs in the wake of concerns about sexual harassment settlements and a slowed review of its Sky acquisition. Shareholder advisory firms ISS and Glass Lewis both supported the proposal, Glass Lewis calling 1 vote per share a safeguard for common shareholders. Co-executive chairman Lachlan Murdoch spoke, saying that shareholders are in good hands with strong brands and a lot of digital growth, a lot of focus on digital. He also addressed reports that Fox is in talks with Disney to sell its entertainment assets. Lachlan Murdoch saying Fox, quote, has the required scale to execute on our strategy and delivered increased returns to shareholders. So, Michelle, based on that, they want to sort of dispel those rumors and talks that they're in talks to sell. Back over to you.
Okay, got it. Thank you, Julia. Coming up, former FDIC head Sheila Bair on the resignation of the head of the Consumer Financial Protection Bureau. Plus, what's tax reform going to mean for the financials? Stay with us. What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times. Only on CNBC-TV18. The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and
welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips, you could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell, presented by National Stock Exchange in association with Fine Cure Pharmaceuticals, Escorts, and Biba.
Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
I am CNBC-TV18's investigative business journalist, and I lead the research team. With the keen eye on balance sheets and profit and loss accounts, I will unearth the secrets that balance sheet hide to tell you the right valuation of companies. I ask the right questions so that you get the right answers with quality research and cutting-edge thinking. I'm always a step ahead so that you are too. I am Varinder Bansal from CNBC-TV18.
They're sharp. They help you get the maximum value for your money.
Market should be too worried.
I can hold on for the next
Growth will be phenomenal.
Buy with a stop loss of
It is positive for the
It's
stock.
a marquee stock
actually valued.
I would possibly wait for the next one.
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from S.P. Tulsian, Prakash Diwan and Ambrish Baliga every day on CNBC-TV18. CNBC-TV18 Market Wallas.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times. Only on CNBC-TV18.
Commodity Champions, brought to you by Nakshatra Diamond Jewelry.
Wednesday, lazy board hoverboard warning and 7 new recalls for various other hoverboards. Those recalls come after 2 house fires were ignited by faulty lazy hoverboards this year alone. One of those fires was fatal. And People magazine has named Blake Shelton its sexiest man alive. When asked about the honor, the superstar country singer said the magazine must be running out of people. Shelton says his girlfriend of 2 years, Gwen Stefani, convinced him to accept the award. Congratulations to him. That's the news update this hour. Melissa, back to you.
You cannot believe the peanut gallery comments on this desk.
I can just imagine.
Why wasn't I on the list? Michelle,
No. Don't be fake news. I said, where was I on the list?
Where were you on the list?
Forgive me.
Sue, happy birthday.
Happy birthday,
thank
Sue
you.
Guerrera.
I appreciate that very much, guys.
Maybe Blake Shelton will sing for you.
I doubt that.
Thanks, Sue.
You got it.
Now to a developing story at this hour. Richard Cordray, the first ever director of the Consumer Financial Protection Bureau, saying he will resign before the end of the month. The news of his departure perhaps not that expected, given that Cordray, an Obama appointee, has been under fire from congressional Republicans since taking over the Bureau. Joining us now to talk banking, regulation, taxes, and more, former FDIC Chair Sheila Bair, who's here on set. Sheila, great to have you with us.
Thanks for having me.
His most recent and public dust-up with the GOP has been over the repeal of the arbitration rule, right? The Senate basically repealed that rule, which would have allowed consumers to more easily lodge class action lawsuits against the likes of big banks, et cetera, firms. And that was really seen as a victory for the financial services industry. He issued a statement on November 1st, which really seemed to be drawing sort of a bright line on this. He said, now more than ever, it is critical that the Consumer Bureau remain a strong check on financial companies.
Right.
Was this the issue, do you think, that really underscores sort of the battle between the CFPB as it is and the Republican Trump administration?
Yeah. So actually, I wouldn't have the arbitration rule be that litmus test. I think there were, frankly, good arguments on both sides. I joke that, two of the most unpopular constituencies, trial lawyers and banks, were kind of going at it. So I wasn't surprised that it ended up where it was. But looking at the overall record, I think the CFPB has done an incredible job. Mortgage lending standards, tackling abuses in the small dollar credit market, a very robust enforcement program, more robust examination of banks, over $10 billion. None of that consumer focus was really present in our bank regulatory system prior to the CFPB's creation. And it showed during the mortgage crisis because there were a lot of unaffordable loans that were made and nobody was watching out. And now we do have a watchdog. So on arbitration, I can see both sides of the argument, but overall, I absolutely agree with them. We need a CFPB as a check. Definitely.
Do you see that this sort of clears the way for the deregulatory agenda that the Trump administration would like to pursue?
Well, it may. Yeah, I think that's a really good observation. There's all this debate about whether, Dodd-Frank's going to be repealed or rolled back, but really, the game changer just could be in the regulatory agencies because Dodd-Frank was really just a giant grant of authority to regulators. And so by putting his own people in, and probably in the next 6 months to a year, he'll have all of his agencies will be dominated by Trump appointees. It could be a complete sea change in regulation.
A lot of Republicans think the CFPB just shouldn't exist,
They do,
period.
yeah,
You're clearly
they do.
not one of them.
No,
but
I've always supported
what about more oversight or in something? Because they don't have it, actually.
Well, I had supported a board or commission structure, not a single head. And for just this reason now, and I think, consumer advocates should be looking, they're kind of all in on one person at the top. With the board, you have a little more moderation on both sides. So it's a bit of a check against the agency going to one extreme or the other. I think on the funding mechanism, it absolutely needs to have autonomous funding. But, like the FDIC, we funded ourselves through assessments on the industry. Right. So there was some discipline there in terms of, some checks and balances. I don't think they should be appropriated. That is a nightmare in terms of having an agency that's independent and has
How about this criticism of the way they leveled the Wells Fargo fine,
Yeah.
which was very, very large.
Yeah.
When the actual individual consumers lost $1 or $2 each, right?
No, that's true.
And the vast majority of the fine actually went to the CFPB. Everybody said, oh, there you go, mission creep, they're going to do this just to raise money.
That's a good question. I mean, they got kind of criticized on both sides. A lot of people said it was too low, given the breadth of it and the systemic nature of it at Wells. And Wells continues to work through their problems. So, I think the actual dollar amount, at least proven, was low, and they're still uncovering things, I think. But the egregious nature of it, and really the lack of controls, and the prudential regulators were on that too, because the lack of controls that people weren't catching that this was going on, or knew about it, weren't doing anything about it, I think was highly problematic. So actually, on that one, I think the CFPB did it.
It's almost been a decade, Sheila, since the financial crisis. We had the financial crisis about a decade after the NASDAQ imploded. We have short memories.
Yes, we do.
Collateralized loan obligations are on the rise again. We've got futures on Bitcoin. We've got 75 or whatever different coins. Do you worry at all that we are going to creep into another, I don't want to say crisis, but certainly make the same mistakes again?
Well, I do, and I think that the public is worried about that too, which is why I'm kind of astonished that we're in Washington, at least, they're talking about deregulation, because I don't think that's what the populace, certainly, who elected Mr. Trump, want. I think there's kind of this pervasive feeling that we didn't really fundamentally change anything about the financial crisis. There was a lot of good regulations, more capital, but it's still basically the system we had, and there is not a lot of confidence about how stable it will be in the next downturn. And, this recovery is getting long in the tooth. There could easily be another downturn in a couple of years, and hopefully that's just part of a normal cycle. But if the banks don't have enough capital, so when those losses come, they don't have the balance sheet to absorb them, they're going to stop lending, and we're going to be right into the soup again. So if I were Jay Powell, I'd be preparing for the next downturn, not worrying about, lifting JP Morgan's capital
So you would keep capital requirements where they are?
They'd go stronger if I had
They
my
go
way.
stronger?
They would. They absolutely would. I think there's still a lot of leverage in the system. I mean, the binding constraint is 5%. So 95% of everything they do can be funded with debt. So that's still a lot of leverage.
All right. Sheila, thank you.
You're welcome.
Sheila
Happy
Bair.
to be here. Thanks.
Tyler.
All right, Melissa and all, it has been a great year for stocks. I don't need to tell you that. The Dow is up 18%, but it's been a rough couple of days. Just a normal, healthy pullback, or could this be the start of something a little more ominous? We'll have more on the markets live from the Schwab Impact Conference in Chicago when Power Lunch returns.
They're sharp, They help you get the maximum value for your money.
Target should be
I can hold on for the next
growth will be phenomenal.
buy with a stop loss of
It is positive for the
It's a
stock.
marquee stock.
Richly valued
I would
stock.
possibly wait for the next
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from S.B. Tulsian, Prakash Diwan and Ambrish Baliga every day on CNBC-TV18. CNBC-TV18 Market Wallas. The clock is ticking and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips, you could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell, presented by National Stock Exchange in association with Fine Cure Pharmaceuticals, Escorts, and Vipa.
Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times. Only on CNBC-TV18.
I am CNBC-TV18's investigative business journalist and I lead the research team. With the keen eye on balance sheets and profit and loss accounts, I will unearth the secrets that balance sheet hide to tell you the right valuation of companies. I ask the right questions so that you get the right answers with quality research and cutting-edge thinking. I'm always a step ahead so that you are too. I am Varinder Bansal from CNBC-TV18.
Forward a little bit.
That's easier.
As you would sum up 2017, why did the market do as well as it's done?
Maybe the president would disagree with me, but I think the two most important fundamentals that have underpinned this last year's strength were actually inflection points that predated the election. Probably most important was the turn in global growth. So all 45 OECD countries are in growth mode. 33 of them have accelerating rates of growth. And then tied into that is the significant inflection point in corporate earnings, U.S. corporate earnings. So I think that really represented the last year's worth of strength. But I think the liquidity environment, which has been so ample, which has been an underpinning under this entire bull market, is still ample.
Liquidity in the form of investor liquidity or in the form of monetary policy liquidity, or both?
Well, both. In fact, I think there's still a lot of investor liquidity, I don't want to say on the sidelines, but that is still potential fuel for the market. But I'm talking about the provision of liquidity by central banks, $25 trillion of assets sitting on central bank balance sheets in an environment where supply has actually shrunk, at least in the U.S. market, courtesy of weak IPOs and stock buybacks. So with any market, supply and demand, when it's imbalanced, there's more demand than supply, prices go up.
So as you look ahead to 18, can this unstoppable, as you've described it, continue? And what's the tailwind and what's the headwind that you see? And overall, what's your view?
I think it can continue, but I do think that there are going to be some headwinds. I think we're getting into the latter stages of the cycle, both in terms of the economy and the market. You're seeing it in a lot of economic characteristics. The pickup in capital spending, the pickup in productivity tend to be late cycle phenomena, so likely peaking in PMIs
That doesn't mean we're at an imminent end, but it's later cycle type behavior. Tighter monetary policy, QE to QT, how unprecedented this is to start shrinking a $4.5 trillion balance sheet. So I would expect to see some bouts of pullbacks.
So you've got your eye on some headwinds. What do I do with that information? What do I need to be ready to do?
I think discipline for investors is extremely important right now, and we're all taught about discipline and diversification and rebalancing and all those tried and true yet sometimes boring things to talk about on shows like yours. But with the crash we've seen in correlations, the opportunities that come not only to rebalance but to be diversified, truly diversified. It's a hard sell when correlations are high and everything's acting the same way.
Right.
Now I think that's your anchor.
My final question, and I have to ask you to be quick because they're wrapping us here. A long time ago, most investors, I think I was the same way, maybe you were or you weren't, thought that my goal as an investor was to beat the market. How has your thinking changed?
I think that never made sense as a goal. I think you have to certainly beat inflation, but it has to be matched to your needs, your needs for income, your time horizon, your risk tolerance, how and when you're going to start to use your assets, use your growth. It has to be a very personal decision. Some arbitrary market benchmark is the thing to beat. I don't think that makes a lot of sense.
Lizanne, always great to see you.
Thanks, Tyler.
Thanks for your time.
My
Appreciate
pleasure.
it. Lizanne
Thank
Saunders, Chief Investment Strategist for Charles Schwab. Still ahead, the best ideas for 2018. More Power Lunch from Chicago after this.
So when do you leave?
At home / a dad. For me, this is
of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips. You could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out, so Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell, presented by National Stock Exchange in association with Fine Cure Pharmaceuticals, Escorts, and BIPA.
I bring you the news that moves the stocks, from new drug approvals to patent challenges to the US Drug Authority's decisions to earnings analysis as it happens for Indian pharma companies. I put the news in perspective with actionable insights. I'm Ekta Batra from CNBC-TV18.
Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times. Only on CNBC-TV18.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity markets and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times. Only on CNBC-TV18.
Commodity Champions, brought to you by Nakshatra Diamond Jewelry.
They're sharp. They help you get the maximum value for your money.
Target should be 2
I can hold on for the next 2 or
Growth
3
will be
years.
phenomenal.
Buy with a stop loss of 2.
It is positive for the
It's
stock.
a marquee stock.
Actually valued.
I would possibly wait for the next.
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from S.P. Tulsian, Prakash Diwan and Ambrish Baliga every day on CNBC-TV18. CNBC-TV18 Market Wallas. This is TV18 and you're watching CNBC-TV18.
I'm going to tell you what the company is saying now about football politics.
Blackberries, iPads, Facebook, Twitter and beyond. They're sharp. They help you get the maximum value for your money.
Target should be 2
I can hold on for the next 2 or 3
will be
years.
phenomenal.
Buy with a stop loss of
It is positive for the
It's a
stock.
marquee stock actually.
Actually valued
I would
stock.
possibly wait for the next
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from S.P. Tulsian, Prakash Diwan and Ambrish Baliga every day on CNBC-TV18. CNBC-TV18 Market Wallas.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I trash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18. The clock is ticking and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips, you could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell, presented by National Stock Exchange in association with Fine Cure Pharmaceuticals, Escorts, and Biba.
Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times. Only on CNBC-TV18.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times. Only on CNBC-TV18.
Commodity Champions, brought to you by Nakshatra Diamond Jewelry.
Checking the markets right now, the major indexes are well off their lows. They're still in the red, however. The Dow Jones Industrial Average lower by about 120 points. The S&P is off by a little more than 11. The NASDAQ is lower by 26 points. Apple is having its 5th straight day of losses. It's off by more than 1%, trading right now at $1.69. 169. One company is initiating coverage, Wells Fargo, with a market perform of Apple. Target tumbling, that stock down over 9% after its forecast for the fourth quarter came in lower than expected. The market, however, remaining bullish on retail overall heading into the holidays. That's because the XRT is up over 0.5% or nearly 0.5%. One surprise winner today, GE, the beaten down mainstay, bouncing back after falling 12% over 2 days. Let's get over to Tyler Matheson over at the Charles Schwab Impact Conference in Chicago. I saw you on TV. I thought you were Charles Osgood this morning.
I like Bo Tyler. I think that's good. Michelle, Michelle, thanks very much. I'm live out at Schwab Impact, as Michelle mentioned. Coming up, the best ideas for 2018. We've got 3 top portfolio managers, and they're going to tell us where they would put money now for maximum return over the next year. Plus, the head of Blackstone's Private Wealth Solutions Group on why that firm is making a big push to bring in retail investors. Michelle.
All right. Thank you very much, Tyler. Let's get more on what's going on with today's market. Bob Pisani's down at the NYSE. Hey, Bob.
Hello, Michelle. 6 straight down days for the S&P 500 at the open. We haven't seen that in over a year, but we're still only 1% from the old historic high, a little more than a week ago. Look at this. Here's the S&P, and once again, same pattern here. The low print for the day is either at or right after the open, and the market has risen all 6 of those days. What you don't want to see here is this drifting down towards the lows earlier in the day, because that would break the pattern that we've seen. That certainly would be negative here. There are still, even though we're only 1% from the highs, still some cracks in the market. Transportation stocks, for example, have had a generally tough month. Some of these are on earnings. Avis had very disappointing earnings. You see that's down heavily. FedEx, CSX, JB Hunt, UPS, broad swaths of the transports are down 3, 4, or 5%. Materials, which were a prior market leader, have also had a tough time on the month. So CF Industries, Dow DuPont there, Dow Component, Martin Marietta, Freeport McMoran, right across the board for the materials also down. And we're also seeing something we haven't seen in a while, an expansion of new lows, not new highs, but some big names like Merck and Schlumberger, Archer Daniels Midland, Whirlpool, and CenturyLink, and some of the telecom has had a rough time of it recently. Overall, we've talked about this change in tone in the markets, progress on tax reform, but no home run, the flatter yield curve, and everyone trying to figure out what that means. Some recent disappointing data from China, and of course, Middle East uncertainty. Right now, I still don't think we're in a huge sea change in the markets, but there are some subtle cracks showing right now. Guys, back to you.
All right, Bob, thank you very much. Stick around, because we need to dig a little bit deeper into that big, but kind of off the radar part of the market, which may be a great leading indicator for stocks. That is junk bonds. Mike Santoli joining us now with more on the potential message of high yield. Mike.
Brian, yeah, well, as you were discussing just a little while ago with Bill Gross, high-yield debt is a very good risk appetite gauge for investors. It's been actually one of the strongest attributes supporting the equity rally all year. What that means is credit spreads on high-yield debt, the yields that investors are willing to accept has been going down relative to treasuries all year, and that's been a big bullish point for the market. If you look, though, at the trend in those spreads, I have a 5-year chart of the high-yield index spreads, which have picked up lately, which means there's a little bit of risk aversion just starting in November. But look at how, in the broader context, this looks like almost nothing. At the very far right, that little tick higher is what we've been concerned about with the high-yield ETFs selling off and all the rest of it. But you see how much stronger, when that chart's lower, it means that high-yield debt is stronger, how much stronger we are than in early 2016. So it's a little bit of a ripple through the markets. It's really a lot right in line with some of the stuff Bob was talking about, which is a half step back from risk we've seen in the global markets. European stocks down 4%, Japanese stocks down 6% from their recent highs, and a cautious tone in the market. So high yield you have to watch. There's some extenuating factors. Telecom's a big chunk of the high yield index. They've had some specific weakness relative to that, related to that industry. So I do think it's one of those things you want to keep it on the dashboard to know if it means that this is more than just a routine pullback of the kind that we've seen both in August and in March of this year.
That's important and very important analysis, Mike, as always, which is the focus on the telecom sector. We've kind of been here before, have we not? A couple of years ago, when oil took its big turn down, a lot of these oil companies, very heavily indebted, started to move the overall junk bond market, but there was a difference between the oil companies and the overall market. Is it fair to say, and I think you hit it right on the head, Mike, that telecom is, I guess, the new oil, if you will, not a crisis, but something that we need to pay attention to?
Yes, exactly. Right now, it's exactly at that level. Now, if you were in late 2015 and you said, hey, don't worry about high yield because it's only oil, well, what you missed there was it was also spilling into a broader industrial global earnings recession, and it was sort of an early warning indicator. But not every time high yield ticks up in yield is it really an indicator of anything broader or economic or systemic going on.
I think, though, the important thing is that as of now, and I don't know if you agree with this, right now, the events in high yield still still don't portend some larger systemic event. As you noted accurately, telecom is the major issue here. The spreads are ridiculously narrow between comparable treasuries, and there are tax issues also floating around there. But would you agree it's not a larger systemic
There's
event?
an angle here on tax reform. It's sending nervousness through the high-yield market if these heavily indebted companies can no longer deduct interest expense, as some won't be able to under this plan. Yes, that is negative for them. So, yeah, I agree with you. And look, we've been so strong. The spreads have been at historic lows, so therefore we're not at worrisome levels just yet.
Right. Guys, thanks. Bob and Mike, breaking news out of the White House. Let's go to Eamon Jabbers. Eamon.
Yeah, hi, Melissa. We're now expecting to hear from President Trump at some point later this afternoon about his Asia trip. We expect he might have something to say about tax reform as well, but the president did not have any official events on his schedule earlier today. Suddenly, we're hearing that something is being announced shortly here publicly from the White House. So we'll probably see the president on camera, probably talking about Asia, but they haven't really been clear with us exactly what the president's going to be talking about here today at the White House. Remember, he got back from Asia late last night. He has had no events on the public schedule today. He's been tweeting throughout the day criticisms of various media outlets, and he's gearing up for tomorrow an appearance on Capitol Hill in which I'm told he's going to sort of urge along fellow Republicans in the House on tax reform. So that's something on his agenda tomorrow. We'll see what he has to say later on this afternoon when we do hear from the president here at the White House. Back over to you guys.
All right. Thanks very much, Eamon.
Yep.
Back to the market. Vale is one of the world's largest commodities companies with a presence in 30 countries. Also one of Brazil's largest publicly traded companies. Company's ADR trades on the NYSE. It's up 28% year to date. And joining us now in a Power Lunch exclusive is the Vale CEO, Fabio Schwartzman, in his first CNBC interview since joining the company. Good to have you here, sir.
Hello, Michelle. How are you?
Good, Fabio. Good to see you again. We used to have you on when you were the CEO of Klabin, which is a paper and pulp company. Now you're running Vale. I got a question for you because one of your predecessors was fired by a former president of the country. She was unhappy with him because he was too focused on shareholder value and he wasn't focused enough on hiring enough Brazilians to work at Vale. Has the corporate governance of the company changed at all? Has it improved at all? Who runs Vale right now? Who's in charge? Is it you or is it the government?
Well, the problem is that I think exactly like this predecessor of mine. I'm really focusing in creating shareholder value. That means if the issue was, the situation was the same, I would be in danger. But actually, we evolved a lot regarding governance. Vale has evolved with large steps towards becoming a true corporation with much less influence from government. And it will be now, we will have in the capital markets in Brazil a ceremony that is scheduled for the next 22 of December, where Vale will become a member of Novo Mercado in Brazil. This is quite an achievement for Vale because it will represent the fact that Vale now has not a defined controlling party anymore. You have more shares in the hands of investors in general than you have in the hands of any of the former controlling companies of Vale.
Okay, so that's a big change. We had on the CEO of Petrobras earlier, and you and he share a similar problem. You inherited companies with large amounts of debts because your predecessors thought the commodity boom would last forever, and they borrowed a lot and spent a lot. You have promised to reduce debt down from 21 billion down to around 10. How are you going to do that? You're going to sell assets? You're going to cut the dividend?
Well, we are enjoying a good moment right now because we are starting the operation of our last big investment that was a new mine in the Carajás system called S11D. This mine is ramping up, and we now have more volumes of high-quality iron ore. Consequently, we are taking advantage of very good margins right now, and our projection shows that during next year we'll be moving in the direction of delivering the $10 billion target mainly through operational cash generation, without having to use any further divestments or any, let's say, not normal things to get there.
Okay. 2 years ago, terrible tragedy. One of the company's mining dams collapsed. Toxic mud killed 19 people. You shared this property with BHP Pilliton. Just this week, prosecutors announced they're going to pursue murder charges against some individuals. How long before this situation stops as a drag on the company? How much is this costing you? And is this finally gotten cleaned up? Where does this stand?
Look, Michelle, I want to take advantage of your question to explain one situation that I think that people don't know a lot about it. We acknowledge that we had a very disappointing and, to say the least, tragedy with this dam that Samarco lost a couple of years ago. But what is different, and I don't think that many people know, is that BHP, Samarco, and Vale took the decision of creating a foundation called Renova, where we put to work already billions of dollars with the objective of compensating people that were affected by the tragedy, rebuilding their homes, and trying to solve the issue with the environment that was created by the accident. This is, I'm calling attention to that fact, because instead of using the slowness of the legal system in our country, we decide to move towards an agreement so that we could start paying up front for the people that were affected by the accident.
Okay. Well, Mr. Schwartzman, thank you so much for joining us. Good luck with your efforts on the company.
Oh, it's always a pleasure to speak with you.
Thanks.
Have a good day.
You too.
Still ahead, China setting its sights on the global pharmaceuticals market. The CEO of one Shanghai-based company that's up 135% this year will join us. And more from Tyler Matheson at the Charles Schwab Impact Conference. Vote Tyler.
Melissa, thank you. Straight ahead, I'll be sitting down with an all-star panel of money managers, and we'll find out where they see opportunity and where they're cautious heading into 2018. There they are. They're ready. They're poised. They're ready to give you their best ideas. More ahead after this.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times. Only on CNBC-TV18.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I thrash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18. The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips. You could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell, presented by National Stock Exchange in association with Fine Cure Pharmaceuticals, Escorts, and BIPA.
Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
They're sharp. They help you get the maximum value for your money.
I can hold on for the next
Growth will be phenomenal.
Buy with a stop loss of it is positive for the stock.
It's a marquee stock actually.
I would possibly wait for the next
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from S.B. Tulsian, Prakash Diwan and Ambrish Baliga every day on CNBC-TV18. CNBC-TV18 Market Wallas.
Portfolio manager with QMA. Michael Cugino is with Permanent Portfolio Family of Funds, and Libby Tuduz is a partner at Cushing Asset Management. We've not met, but we've only met via the television, so it's good to be with you in person, folks. Libby, you have a very strong stake in the ground. Best idea for 2018 is?
Infrastructure, energy infrastructure, to be specific. And the Enterprise Products, I think, is one of the best companies in the business. They have a geographically diverse footprint. Company yields almost 7%. And they moderated the growth of that distribution, and the stock got hit. I think that's a mistake in the market.
Why do you like energy infrastructure? Partly the fact that you live in Dallas and you know a lot about it, but why do you like it as much as you do? And are these mostly MLPs that we're talking about here, or what?
Many of these companies are structured as master limited partnerships, yes, but it's the energy infrastructure business that we're talking about.
Why do you like them? Is it a price thing? Is it the costs have been sweated out? What?
Yeah, I think it's a combination. If you think about infrastructure, high barriers to entry, pricing power, stable cash flows, sustainable growth, especially when you talk about energy infrastructure. And these companies have been taken down with the energy industry when they're a volume business. They're not a price times volume business, but they've been treated as such.
Ed Keon, you get to go next. You have been favorably disposed toward international stocks.
We still are.
You still see that as a best bet for 2018?
We still are. So within our we do a lot of asset allocation portfolios. So we are overweight equities generally, although we're nervous about that a little bit given where valuations are. But although we're overweight the United States, we have bigger positions outside the United States in both developed and emerging markets.
Like Ed, you see 2018 stacking up as not this beautiful straight line rise. You think it may be a little bumpier. Explain why. And explain, Michael, what you like as themes for next year.
Yeah, we're kind of in the middle of both here. But, yeah, our view is that the next 5 years are not going to look anything like the last 5. I think you look at rising global interest rates. Global growth is starting to pick up. You have better business or pro-business stimulus and tax policy. Likely, whatever it's ultimately going to be, it's going to likely be better than what we have now. You've had good corporate earnings. You have an infrastructure rebuild likely coming down the pike. So there's a lot of reasons for a growth element to come back into the economy. And with rising rates, there's a likelihood that you might have a capital allocation from stocks and bonds and real estate back to productive goods and services in the economy.
You like energy. You like materials. You like some natural resources.
We do. I mean, our view is that the commodity bottom was about a year and a half ago, and that if you get this global growth story coming into play, then the demand is going to pick up for commodities, and the dollar will likely go down versus the other currencies because of rising global interest rates, which will be a better value against the U.S. dollar, so that dollar spike will go away. It's better for international equities, it's better for global growth, and it's better for commodity demand going forward.
Ed, when I sort of painted you with a broad brush there, saying you like non-U.S. stocks, but what markets in particular do you have your eye on for next year?
Well, we have an overweight in Japan. So
really?
Japan has a forward PE about 15 versus 18 in the United States. Their growth is actually, their earnings growth is actually faster in the United States, both this year and next year. Their leadership has just been reelected, so Mr. Abe now has a chance to maybe implement some of his policies, which have been difficult to do. So I think you have the combination of good growth, good valuation, and potentially some supportive policies. I think that's a good combination. And so we're overweight that within our asset allocation portfolio.
Let me talk a little bit more about your area of focus, which are these energy infrastructure plays, and how important is the growth component of those stocks versus the income component of these holdings, because they all do tend to have high yields.
Yes.
You get paid to own it.
Yeah, this asset class is interesting because originally it had been more of a retail asset class because these companies paid out high yields. It's in the process because it's gotten large enough, shifting to a more institutional ownership, but we're in the early stages of that. But you can get on average, somewhere between, on the low side, maybe 4 or 5% yield, some as high as 8 and 9% yield with a growth component. As Michael said, energy's probably bottomed. We're in a good tailwind for that space, and it's a really good time to be looking at these
Libby,
stocks.
I'm a Redskin fan, but I still like you.
I'm a New York Giants fan.
You're a Giants fan?
Yes, I am.
Who lives in Dallas?
And lives in Dallas.
You are in danger.
Some years are good, some not so good.
It's not a good year this year.
No,
My
it's
son's
not.
a big Giants fan. Libby, Michael, Ed, good to be with you. Thanks so much.
Thanks,
Brian, back to you.
All right, Tyler, thank you very much. Appreciate it. Well, if you are a retailer, your best bet for increasing sales may be Taylor Swift. You are never, ever.
The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips. You could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell, presented by National Stock Exchange in association with Fine Cure Pharmaceuticals, Escorts, and BIPA.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I trash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times, only on CNBC-TV18. Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
They're sharp. They help you get the maximum value for your money.
Target should be 2
I can hold on for the next 2 or
Growth
3
will be
years.
phenomenal.
Buy with a stop loss of
It is positive for the
It's a
stock.
marquee stock.
actually valued.
I would possibly wait for the next one.
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from S.P. Tulsian, Prakash Diwan and Ambrish Baliga every day on CNBC-TV18. CNBC-TV18 Market Wallas.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times, only on CNBC-TV18.
Commodity Champions, brought to you by Nakshatra Diamond Jewelry.
With Jimmy Fallon and wore a sweatshirt made by RTA. The sweatshirt immediately sold out in almost all sizes on 2 different websites. It goes for nearly $600, $596 to be exact. Swift can also move her own merch. She sold 1.5 million copies of her new album, Reputation, in the United States in the first 4 days of release. That number makes it the top-selling album of 2017 so far. It's also the first album to sell 1 million copies in a tracking week in nearly 2 years.
Is it like rare cashmere?
Is it made of gold?
Gold?
Imagine the margins on a sweatshirt that sells for $600.
6 cents of cotton.
Yes.
Yeah.
Exactly.
It's the labor cost that always gets you, Brian.
But impressive that she can sell so many albums.
Good for
She's got
her.
a tremendous brand.
Yeah.
Exactly. China making big moves in the pharma space, and one company is taking advantage. Shares of Chimed are up a whopping 135% this year. We're going to talk to the CEO about its growth and the opportunities in China. Power Lunch is back in 2 minutes.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I trash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times, only on CNBC-TV18. Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times, only on CNBC-TV18.
Commodity Champions, brought to you by Nakshatra Diamond Jewelry.
They're sharp. They help you get the maximum value for your money.
Market should be too worried.
Hold on for the next
Growth will be phenomenal.
Buy with a stop loss of
It is positive for the
It's a
stock.
marquee stock actually.
actually valued.
I would possibly wait for the next.
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from S.P. Tulsian, Prakash Diwan and Ambrish Baliga. Every day on CNBC-TV18. CNBC-TV18 Market Wallas. The clock is ticking and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips. You could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell, presented by National Stock Exchange in association with Fine Cure Pharmaceuticals, Escorts, and BIPA.
Naveen, on our behalf, we really appreciate you helping us out.
The execution of an Ohio man has been called off. Alva Campbell was set to die by lethal injection, but a doctor could not find a vein to administer the IV. Campbell has been in ill health. His attorney had asked that he be taken off death row, but that was denied. Prison officials had agreed to allow a wedge-shaped pillow to allow him to breathe during the process. Prince Harry visiting a new type of HIV testing site in London to launch National HIV Testing Week. During his tour, he met some of the shop's volunteers and watched a live demonstration on how to use those self-testing kits. That is the news update this hour. Brian, I'll send it back to you.
All right, Sue. And again, happy birthday.
Thank you, Brian.
All right, the oil market closing for the day. How did the market trade? Let's find out with Jackie DeAngelis. Jackie.
Hey, good afternoon to you, Brian. Well, crude oil moving lower today, about 0.75% after that bearish inventory data from the EIA. Unexpected builds in crude oil and gasoline, as well as U.S. production reaching a new record. So the recent run in crude has been based on geopolitics and OPEC. What the data and the reaction today tell us is that the fundamentals are still probably a little skewed. Adding to the pressure, the IEA saying demand next year may not be robust. So we've seen this before. The supply and demand, they move in opposite directions and price pressure ensues. But don't expect it ahead of that OPEC meeting. We'll probably see some support, maybe a price drop later in the winter. Back to you.
All right, Jackie, thank you very much. Let's get back now to Chicago. It's his kind of town. Tyler Matheson.
My kind of town. That's right, Brian. Thank you very much. With the rise of retail investors, many of the heavyweights in the private equity area are making more direct sales pitches to investment advisors, and they are seeing the results. And one of them is with us right now, Joan Solitar. She's the head of private wealth solutions at Blackstone, where nearly a quarter of the firm's total assets under management now come through the retail channel. I don't think most people, Joan, first welcome.
Thank you.
I don't think most people would know that about Blackstone. They think of it as an alternative shop that is fed by mostly endowments, pensions, big wealth managers.
And I think you're right, but there's increasing demand on the part of individuals from mass wealth up to family offices for more alternative products.
So what, as you circulate here, this is the first time you've been here to this big scrub.
Pretty awesome event.
It's pretty awesome. It's very well run and the whole thing. What is your pitch to these RIAs who are really the audience here? What do you tell them you can do for them?
That we really want to partner with them. This isn't about selling a product. We can provide everything from education on alternatives to the full suite, from hedge funds, credit product, private equity, real estate, and we can weave those together, create multi-asset products.
What do you find they want from you? That's your pitch to them. What do they want from you, and how does it work? If my investment advisor in Falls Church, Virginia, who has $300 million under management, let's say, or something like that, says, I'd like to do some business with you.
Yes.
How does that money flow to you and get put to work, and in what?
So first, they want great returns, and they want a manager that's able to provide really good service, transparency, reporting, etc. But we can provide yield products in credit, in real estate, for example. Sometimes they want longer duration product, and we can provide that too. But they access it in a lot of different ways. So the wealthiest investors will sometimes come direct, but mostly they're really listening to their advisors and going through those channels.
So as you well know, Schwab and these RIAs here drive a very cost-focused approach to investing.
Yes.
And when I think of private wealth, like Blackstone is known for, I think of a white shoe product with a white shoe price. How do you price these things for this mass audience?
So we're providing institutional quality product and institutional pricing. So what that means is they're getting excellent net returns. So yes, we're going to be more expensive than an ETF or a passively managed portfolio, but what we're really doing is intervening in these assets, and we're investing quite a lot in portfolio management. So we're looking for companies or real estate assets that are requiring some kind of attention, either capital, a change of management. We're going to build them out. We're going to change pricing strategies. So if you think about the debate today between passive and active, we're really over here. We're the interventionists. We're changing the assets, and that costs money.
The Interventionist sounds like the title of a great movie. Maybe we should work on it together.
Absolutely.
So where does the money get put to work? Is it mostly going into real estate? You've got a huge real estate portfolio. Or is it mostly going into other kinds of private equity solutions?
So if you're talking about the mass affluent, today it's really going into our daily liquidity hedge fund product or some of our real estate product. But we do also, if you move up the wealth curve, have a lot of investors across the board in private equity, in multi-asset product. They're really looking at the full suite of what we can provide.
Do you think, you say now roughly 20-25% of Blackstone's assets under management come in through the retail window? What's that going to be looking like in 10 years?
I think there's no reason that half the assets we manage won't belong to individuals. Really.
Good luck to you on that.
Thank
I know
you.
you're going to try and make that happen.
Absolutely.
Joan, thank you very much.
Thank you.
Nice to meet you. Joan Solitar from Blackstone. Melissa, over to you.
Tyler, thank you. Shares of some biopharmaceutical companies like Hutchison China Meditech have been soaring this year as investors bet on China's potential to feed the global pharmaceutical pipeline. Joining us now for a Power Lunch exclusive is Christian Hogg, the executive director and CEO with Hutchison Chi-Med, commonly called Chi-Med. The ticker is HCM. Christian, welcome to the show.
Thank you, Melissa.
You said recently that it's like a coming out party for Chinese biotech, and in fact, we've seen tremendous appetite for Chinese biotechs that have recently IPO'd. Yours, along with Beijing, you're both up more than 100% year to date. What has happened on the regulatory side that's created this sea change?
Well, I think that when I use the term coming out party, it's coming out party after 20 years of grinding hard work. So it's the realization that many companies are now being able to innovate in China for the global marketplace. I think the primary thing that's changed in the last 10 years has been the Chinese government's view on the regulatory environment. Historically, going back 10 years, 15, 20 years ago, it was very slow, it was very laborious, very bureaucratic. It wasn't focused on bringing innovation to the people of China, where there's an enormous unmet medical need.
It's the second biggest drug market in the world.
And you've got 30% of the world's cancer patients in China. So, you have to be bringing innovative medicines to these patients. So I think about 10 years ago, 10 years ago, the Chinese government figured this out and said, look, we need to streamline this process. We need to make it easier for innovators to come in and develop drugs to get them to those patients. So massive changes have happened over the last 5 years, particularly the last couple of years.
And specifically, the acceptance of overseas clinical trial data, that's really cleared the way for a lot of drugs. I mean, that's certainly helped you with a drug, correct, that you're developing in partnership with Lilly for bowel cancer.
Yeah, I mean, it's helping multinationals bring their drugs into China quicker. That's for sure. Historically, it's been more difficult for multinationals to bring their drugs into China. But I think the Chinese authorities recognize that innovation doesn't matter where it comes from. If it's going to help patients, it's going to help patients. So they're making it easier for multinationals to bring their products in. And they're also making it more streamlined for local companies to innovate and bring novel drugs through to the market in China.
So this is a drug that you're working with Lilly for approval here in the United States. When should we expect that? Is that by the end of the year?
Actually, it's slightly different.
Okay.
So the drug that we're in partnership with Eli Lilly on, this was an innovation that we created in China. Actually, it's the first drug in a mainstream oncology indication to come from discovery all the way through NDA submission in China. It's never happened before. This is the first one. And we partnered with Lilly throughout that process to ultimately to commercialize it in China. The drug that we're working globally is with AstraZeneca. It's a drug called savolitinib, which is a c-Met inhibitor in lung cancer, gastric cancer, kidney cancer. And that also has the potential to be the first drug that has been discovered in China to make it all the way through to US FDA approval. Now, we're obviously still a little bit away from that, but we're very hopeful.
When you go on the road, you were just at an investor conference in New York this week, correct? Is there investor skepticism still about biotech in general, or because you're Chinese biotech, is that an exception? Because we've seen here in the United States, biotech has really been under pressure for various reasons, regulatory concerns on pricing, but also the results in the past quarter have just not lived up to investor expectations.
I think there's always skepticism, and healthy skepticism, about China. You've had a lot of companies that have come to list in NASDAQ over the years and have failed miserably. And I think that, you've got to differentiate between new world, new economy China, and old economy China. New economy, I think, is the whole IT revolution. It's the Alibabas. It's although Tencent is not listed here, it's it's a $500 billion market cap company, and so this whole world of the whole new economy, and I think biotech fits into that because it's science-driven. The reason we're listed here is because the specialist investors that reside in the United States are best positioned to understand our business and value it properly. This is all, call it modern, reliable metrics. It's transparency. It's good communication. These are good businesses. Old China economy is the stuff I wouldn't touch with the 10-foot pole. And unfortunately, that's what came here, over the last 15 years. But people learn their lessons. But they've got to differentiate between old economy and new economy.
Christian, thank you for visiting us. We appreciate it. Christian Hogg of Chi-Med.
Airbus announcing it has closed one of the biggest deals in aviation history, 430 airplanes for nearly $50 billion. We're going to let you know who the buyer is and what it may mean.
Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times, only on CNBC-TV18.
Commodity Champions, brought to you by Nakshatra Diamond Jewelry.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times, only on CNBC-TV18. The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips, you could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell, presented by National Stock Exchange in association with Fine Cure Pharmaceuticals, Escorts, and BIPA.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I trash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18. They're sharp. They help you get the maximum value for your money.
Market should be too worried.
I can hold on for the next 2 or 3
Growth will be
years.
phenomenal.
Buy with a stop loss of
It is positive for the
It's a
stock.
marquee stock.
actually valued.
I would possibly wait for the next.
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from S.P. Tulsian, Prakash Diwan and Ambrish Baliga. Every day on CNBC-TV18. CNBC-TV18 Market Wallas.
737. These guys have stakes in 4 different airlines. Frontier, Volaris out of Mexico. I'm sure you've heard of them. Michelle, if you've been down there, you've seen them. So they're going to have no problem putting these aircraft in use. And for Airbus, it's a nice way to end this show because Boeing really was having a heck of a show with $50 billion in list orders.
But to underline, this is a private equity firm,
Correct.
essentially, that
and has a
invests
stake in these 4
Yep.
airlines. There's no shortage of people who will take these airplanes and put them in use.
GM predicting 1 million, I want to do this when I say 1 million electric cars by the year 2026.
Right. Mary Barra speaking at I think it was Goldman Sachs had a conference today here in New York. And essentially it comes down to this. General Motors believes that between now and 2026, and really after 2021, that's when they're going to be pushing this family of electric vehicles. And the key point here, Mary Barra says that they will be able to reduce the cost of the electric battery by 30%, getting it down to the level of $100 per kilowatt hour. And that's hasn't said how, but they have said, look, they plan to be profitable, and that's significant because they're losing money on the Bolt right now. They're losing money on the Volt. All automakers with these electric vehicles are losing money. They've got to be able to make money at some point in order for them to continue to develop and bring these costs down.
I don't understand how you reduce the cost, though, by 30% if you don't own your supply chain. How can she actually say that they're going to reduce the cost?
I was not at the investor conference, so I can't answer for her. I don't. But it's just, they have been bringing it down. They've been working with. I think they work with LG Chem as their main supplier, and they have been working on that, and they have been bringing down the cost. Now, that 30% is significant down to that $100 level, but that's not until 2021.
So from electric cars to electric trucks?
Electric trucks. Tesla expected to unveil its semi-truck tomorrow. Phil, what do we know?
Well, we know this is the image that everybody has been looking at and saying, wow, this looks unlike any other semi that's out there. Well, it's a silhouette image. Let's see what it really looks like. We'll see it tomorrow night. Elon Musk will unveil it down in the Los Angeles area. And like everything with Elon Musk, he says it'll blow your mind. We'll see if that's really the case. And whether or not this really is a game changer in terms of the trucking industry, keep in mind, the other manufacturers are also working on electric trucks. It's not like Tesla is the only one out there doing this.
The key thing that will be the range.
The range.
I would think. Yeah.
Absolutely the range. Because now you get into, does it make sense versus a diesel?
Right. Thanks, Phil.
You bet.
Good to have you in studio. Okay, the founders of Ben & Jerry's saying thanks, but no thanks to a tax cut. Find out why lower taxes aren't part of their American dream.
Americone.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times. Only on CNBC-TV18.
Commodity Champions, brought to you by Nakshatra Diamond Jewelry.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks. At these times. Only on CNBC-TV18.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I trash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18. The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips, you could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell, presented by National Stock Exchange in association with Fine Cure Pharmaceuticals, Escorts, and Biba.
speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
Taxes be raised, or at least not cut. Ben & Jerry's founders Ben Cohen and Jerry Greenfield signed a letter along with many other millionaires asking Congress to raise, not cut, their taxes, and they join us now. Gentlemen, welcome. Ben, you guys have been at this fight for a while. This is nothing new for you. Is this primarily around the estate tax, or is it all the taxes?
It's all the taxes. I mean, the estate tax is certainly a big part of it. There's this misconception, there's this lie, essentially, that, the estate tax affects small business people and small farmers, and it's not true. I mean, it only affects, what is it, the 0.1 or 0.01% of the population.
No, so the issue is that the tax cut is for corporations and wealthy people, and it's not going to help poor people. It's not going to help middle-class people. It's going to throw people off of health insurance. It's bad in so many ways.
If they eliminated the repeal of the estate tax part of it, or that just disappeared, because you guys are right. I mean, I think it was 4,700 tax filings that were subject to the estate tax last year. I mean, it's the tick on the back of a fly, but it gets a lot gets a lot of attention. If they eliminated that, would you still have your complaints?
Yes. Oh, yeah, because it's about a payoff to wealthy people in this country, businesses, wealthy individuals who've been making huge political contributions to get people elected to reduce their taxes.
Does our corporate tax code make us uncompetitive or not, in your opinion, in the rest of the world?
Not at all. I think that our taxes, when you look at what kind of taxes our corporations actually pay, I mean, there's loads of our corporations that don't pay any tax at all. They've got enough loopholes and special exceptions written into the corporate tax laws as it is that they don't need any more tax cuts.
Well, so what should the corporate tax rate be, do you think?
I think it's fine where it is. I think what people don't understand is that businesses really benefit from all the investments that we make in infrastructure, in our society. Business benefits from a healthy society. It doesn't do any good to have a society where we have a bigger discrepancy between wealthy people and poor people. I mean, we've already got a huge issue with that as it is.
So I think that's the major issue, is that this tax scam that's being put out now is just an excuse to give more money to already wealthy people. And we already have the biggest spread between rich and poor in the entire developed world.
So why not just be against what is on the table in terms of proposed tax cuts? Why go out there and actually say you want a tax hike and that taxes on the rich should be higher? Why don't you just keep taxes where they are and write a check to whatever charity or the U.S. government if you wanted?
Well, I think we do both. Certainly, we and the hundreds of other people who signed this letter are doing what we can, but it's a drop in the bucket unless we do it for everybody, for all the wealthy people in the country. So it's not just individuals doing it, but it becomes structural so that our society can fund what we need. I mean, we have people without health insurance. We have people on Medicaid. We have people on Medicare. We have people in poverty in the richest country in the world, and we're looking at giving a huge tax cut to wealthy people and corporations. It just makes no sense.
Gentlemen, thanks for being on Power Lunch.
How could you say it any better than that? It just makes no sense. I mean,
see you later. We've got to pay the bills, unfortunately, because of all those taxes that we have.
Unless you want to write us a check. Speaking of check please is next.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times. Only on CNBC-TV18.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I trash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18. The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips, you could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell, presented by National Stock Exchange in association with Fine Cure Pharmaceuticals, Escorts, and BIPA.
Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
They're sharp. They help you get the maximum value for your money.
Market should be too worried.
I can hold on for the next 2 or
Growth
3
will be
years.
phenomenal.
Buy with a stop loss of
It is positive for the
It's a
stock.
marquee stock.
Actually valued
I would
stock.
possibly wait for the next one.
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from S.B. Tulsian, Prakash Diwan and Ambrish Baliga. Every day on CNBC-TV18. CNBC-TV18 Market Wallas.
Money that the government should be spending on all these things, they make the assumption that the government's going to spend well, and it never does. I mean, those guys allocated capital at one point in their lives before they sold out to Unilever for hundreds of millions of dollars. You think they'd know better?
But they stand up for what they believe in.
That's true, along with a lot of others. Tyler?
All right, you know, one of the great things about being here at Schwab has been to get to sit down with some of the top minds in money management. One of the other things is that our friends at Schwab, who have hosted us for several years, paid a wonderful tribute to a dear friend of all of ours, a former stage manager, Jeff Cortelyou, who passed away after several courageous bouts with cancer over the years. And when we arrived here yesterday, the folks at Schwab had prepared a tribute to Jeff, who was, I have not been, frankly, to Chicago without Jeff, maybe ever, to do television. And I know all of you on the set there have experiences with his professionalism. He's really, really missed already. He was never without a Diet Coke, never without a headset, and always with a director's chair. And we're very grateful to the folks at Schwab for paying tribute to a good and dear friend.
We are all lucky to have worked with them. Tyler, good work out there. Thanks for watching Power.
Closing Bell starts right now.
Just very quickly on that note, Jeff Cortelyou is one of the classiest, most wonderful people we have ever worked with. That was a wonderful thing for Schwab.
He and I went on many a road trip, and we had no idea he was not well, and it was such a shock to all of us.
And he wouldn't have wanted anything.
Exactly. He was that kind of guy. We miss him terribly, but that was a nice tribute that Schwab paid.
Yeah,
That's
very
great.
nice. Thank you, Schwab. Welcome to the Closing Bell, everybody. I'm Kelly Evans down at the New York Stock Exchange.
And I'm Bill Griffith. A weak day for stocks again. We're off the lows, but not by as much as we've been lately. We've seen a sell-off on the open each day this week, and then we've come back. We've come back a little bit, but we're still down triple digits on the down right now. We're going to talk about what's behind the move and debate whether this pullback is worth buying yet. Plus, a top money manager from Ariel Investments will give us her contrarian investment pick right now. You're going to want to hear what that is coming up.
And new developments for the AT&T Time Warner deal, including talk of a potential complaint coming from the Justice Department. David Faber will have the latest for us shortly.
Plus, you probably have heard President Trump is set to speak at the White House in the next half hour or so. After returning from that 12-day trip to Asia, we'll bring that to you live as soon as it gets underway. He's going to talk about a number of things, including taxes and trade and other things as well. Let's start, though, with this sell-off today. The Dow down more than 160 points at its low this morning. Bob Pisani has more on what's behind this sell-off again. Bob?
Hello, William. 6 down days in a row. We have opened down 6 days in a row. Haven't happened that in more than a year. I want to show you the S&P 500 chart because it's very important we hold here. The reason is every day, the last 6 days, we've opened at or near the lows and then come off of the lows to go into the close. We want to stay right here. You want to be down around 10 points. That would continue that trend. But if we drop down towards the lows earlier, say the S&P is down 20, 22 points at the close, that would be the reversal of a trend. That'll get a lot of people talking. S&P is only 1% from its historic high a week ago, but there's some cracks showing out there. We've been talking about the transportation stocks. That's a real weak part of the market right now. And we've seen Avis on poor earnings results down almost 20% this month. FedEx, CSX, Hunt Transport, UPS, a broad swath of stocks down 4 or 5%. Materials were also a market leader. Cyclicals were earlier, but they've also been showing some signs of weakness. Dow DuPont there, of course, which is a Dow component, down almost 6% on the month. Freeport McMoran down about 3%. We're seeing for the first time in a while an expansion of new lows, not new highs, but new lows on the New York Stock Exchange. So even an airline, United Continental's at a 52-week low. I'm talking intraday now. Schlumberger, CenturyLink, Archer Daniels, Whirlpool. And Vinny, come on over here. I'm going to show you a Dow component that just hit a 52-week low, and that's Merck right here. So it's been a while since we've had Dow components at new lows. Remember, General Electric yesterday, 52-week low. Not today. GE is up, but Merck now joining that 52-week low list. Guys, back to you.
Now, there's been weakness in biotech lately. CenturyLink, I think, Bob, was like a 20-year low over there, and telecom is upsetting high yield too. I mean, there's definitely pockets here of weakness.
And we haven't mentioned the Russell 2000. We've been talking about it the last 4 or 5 days. That notably has been underperforming for a while, and most people feel that's an issue related to tax reform because small cap stocks would benefit disproportionately from any tax reductions.
Yeah, and that weakness started in early October. That's been around a while too. Thanks, Bob. We'll see you on the close. Let's get to our closing bell exchange with all of that set up there. Beth Lilly joins today from Crocus Hill Partners. She's at Post 9 with Keith Bliss from Catone & Company, and Rick Santelli checks in from the CME in Chicago as well. So, Keith, what do you make of this? I mean, now the glass is suddenly half empty for the stock market. What are you guys talking about here on the floor?
Well, some of the points that Bob just made with regard to the internals inside of the market are very important to look at. But one of the things that we're really focused on is what's happening in the high yield market. If you look at the ETF that tracks the high yields, the HYG, which we have vastly oversold at this point in time, so we would expect to bounce. But we're all talking about, is that the canary in the coal mine? And previous canaries in the coal mine are still in our collective conscience from 7 or 8 years ago. So we're looking at that a little warily. But one thing that is important to note about the strength, as a counterpoint to that, the strength of this market, as you said, the last 6 sessions, we start off with these big sell-offs on the open, and then we trade higher through the day, and we start to end higher. Now, we are moving down lower, but we're still not oversold yet in the broader markets, and we wouldn't get there until we get around 23,000 on the Dow. And you talked about where are people going to come in and really set up a good, strong bid in this market. I think that's when we get down to that level, around 25.15, 25.20 on the S&P 500. So watch those levels right now. This weakness could continue for some time. I don't think it's the be-all, end-all and real correction that not everybody, but a lot of people are looking for. But we will see some weakness into this. The other important point that you were just talking about is the Russell 2000, and that's not only a tax debate problem, that's also a yield curve problem, because remember the broader makeup of that constituent group are financials in nature, and they're being whammied a little bit by that flattening yield curve and what's going to be the aspects of that going forward.
Beth, you guys try to look for those cheap names, let's call them, in the market that everybody else is overlooking. It hasn't been a good year for trades like that. Talk to us about some of the places that you do see value here and whether an overall market skid like this maybe creates some opportunities for what you do.
Sure. So we look for misunderstood, not well-covered companies that really Wall Street has forgotten about, and particularly as this market moves more and more into, passive and ETFs, it creates a lot more opportunities for us. And so one company that we're really excited about is Regis Corporation, which is the largest hair salon operator in the country, and they have a new CEO that's come in, Hugh Sawyer, who really is refocusing Regis on franchising and also growing their company-owned stores. But he's taking out extensive costs. They've just sold off one of their salon concepts. And we think this stock, which is around $14 today, has the potential to go to $20, if not $25 over time. So as we look at the overall market, we just think that there's lots of pockets of opportunity in these smaller cap stocks.
Hey, Rick, adding to the talk of the flattening yield curve, flattest on the 2s and 10s that it's been in about a decade here. The dollar index continues lower. The inflation numbers came in low. Oil continues lower. Do you think the market is starting to sense a slowdown economically here? Is that what's going on, do you think?
I think that the market is sensing a bit slower. I'm not sure if it's sensing a full-blown slowdown. If you look at some of the numbers in Europe and even to some extent in Japan, and you forget all the negatives they have with negative rates and their central banks, the data lately doesn't look too bad. And with respect to the U.S., yes, we have benign inflation numbers. Retail sales might not have been something to celebrate, but it wasn't a bad number. We have seen certain things recede a bit, whether it was Michigan or Philly Fed, some of the more qualified numbers that are less quantitative but still important. But I don't think it's the slowdown. I do think that everybody becomes very skittish when two events align. The flattening curve, and I think we can thank Europe in part for that, because our long end is following their long end, which looked like it jumped when we saw the rates move, 10-year move closer to 240, but it's dribbled away. We're now down a half a dozen basis points on 30-year bonds. The other issue was mentioned by Keith Bliss, and that is what's going on in high yield. And there also, it's a cautionary tale, but nothing to flash yellow or red. Hopefully you're looking at some charts. A 1-month chart of the Barclays spread. It widens when HYG gets a little less pricey, and that's probably a good thing. But it disappears when you look at a 5-year chart or a 1-year chart. HYG ETF is acting a little larger, but that makes sense. It's an ETF. It's just a different animal.
Keith, what about some of the selling pressure that's come overnight into our sessions from Europe, even from Asia? What's going on there?
Well, we certainly have seen a rotation of, lately, the last week, a rotation of money out of the emerging markets and out of some of the European markets, which in my mind is not all that unusual. They've had an excellent run here the last couple of months. People are going to recalibrate their portfolios. They're looking at better risk-adjusted returns coming into this market writ large, not in maybe individual names, but if you look at the broader market, I've said it for a long time, the U.S. still remains the best risk-adjusted return game in town, and therefore they're going to take their gains, they're going to move it out. It has created a bit of a momentum leap around the globe from session to session. I think that'll start to straighten itself out a little bit. But again, echoing Rick's comments, who echoed my comments earlier, I think the bigger issue right now for the market, outside of the tax debate shenanigans going on down in Washington, is what's happening in high yield. That's got to get rectified over here in the next few sessions. The HYG has to catch a bid, bring it back. Some of the telecom names need to get out from underneath that pressure, and then the market will start to stabilize a little bit more.
Beth, before we go, I know you take your stocks on a case-by-case basis, but from a macro perspective, are you looking at the kinds of companies that could be hurt by the tax debate if they don't get the kind of relief that they were hoping for, and by the monetary policy that's going to start to see a little tighter money down the road here a little bit?
No. We really focus on the small and micro caps part of the market, and those companies, regardless of what goes on with the tax bill, are going to continue to do really well. And so I think, and I would contend that the economy is improving, and, maybe 18 to 24 months from now, we're going to have some challenges. But as we talk to these companies on a case-by-case basis, they are very encouraged about the outlook for the economy, and they're not focused on the tax bill and all these exogenous events, and they just continue to see improving demand and improving fundamentals in their core businesses. And so we're continuing to find very inexpensive stocks to buy in the small cap part of the market and are very encouraged.
All right, very good. Beth, thank you for joining us today. Good to see you. Keith, Rick, as always. See you later. Thanks.
My pleasure.
Bye-bye.
Uncertainty over tax reform is weighing a bit on the broader market. House Speaker Paul Ryan talked taxes this morning when he was on Squawk Box. Elon Moe joins us with more now from Washington. Elon?
Kelly, big question mark now over all of those delicate negotiations that have been underway these past few weeks, now that the Senate is taking up the repeal of the individual mandate along with its tax plan. Now, this is a strategy that the House had considered, but it decided not to go that route. And House Speaker Paul Ryan said on CNBC today, though, that his members do still support that idea.
So we've had the House votes to do that. We passed our repeal of the individual mandate back in May. But we never had the votes in the Senate. So what we didn't want to do is make tax reform harder than it already is. But it really is whether or not the Senate has the votes for this or not. So we're seeing what the Senate can do. If the Senate can get it through committee, if they can get it through the floor, then we'll meet them in conference and we'll assess at that time.
The House will be voting on its own version of the tax bill tomorrow afternoon, but this debate is just red meat for Democrats ahead of that vote. Right now, they're criticizing the GOP tax plan as essentially paying for tax cuts for corporations by taking health insurance away from the poor. And it's not just Democrats who are worried. Some moderate Senate Republicans are wary as well. Senator Susan Collins of Maine said today that she is concerned about mixing health care with tax reform, but that she wants to see the whole bill before she makes a final decision. Now, there is another change that is also roiling this debate as well, and that is the proposal to make all of the individual tax cuts temporary. So that means the lower rates, the repeal of the alternative minimum tax, the increase in the exemption for the estate tax, all of those would go away after the year 2025. So guys, there is a lot of complex details to digest here in these proposals and not a lot of time for lawmakers before they have to vote on these ideas. Back over to you.
Very interesting. If you can't get the numbers to work, you change the time horizon. Then go back to complicated
Absolutely,
taxes,
and they're betting. And they're betting that other lawmakers in the future won't have the ability to raise those taxes once they expire.
That's a big can of soup they're kicking down the road there, for sure. Thanks, Elon.
Thank you.
See you later.
Thank you.
Meanwhile, Target promised increased investment in stores and new private label brands, but a lower fourth quarter sales outlook sent that stock down. It's down now almost 10%, I think, right now. We'll hear from the company's CEO coming up in a few minutes here.
And Amazon making its presence felt in the aisles of...
They're sharp. They help you get the maximum value for your money.
I can hold on for the next 2 or 3 years.
Will be phenomenal.
Buy with a stop loss. It is positive for the stock.
It's a marquee stock.
I would possibly wait for the next.
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from S.P. Tulsian, Prakash Diwan and Ambrish Baliga every day on CNBC-TV18. CNBC-TV18 Market Wallas.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I thrash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18. The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips. You could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell, presented by National Stock Exchange in association with Fine Cure Pharmaceuticals, Escorts, Bipa.
Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times. Only on CNBC-TV18.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times. Only on CNBC-TV18.
Commodity Champions, brought to you by Nakshatra Diamond Jewelry.
Let's get to some of the other movers on Wall Street so far today. Accorda Therapeutics falling sharply. The company said that it has paused enrolling new patients in 2 key trials testing its Parkinson's drug following deaths of some patients. The company still expects to report data from that late-stage trial in the first quarter of next year. The stock, as you see, down almost 40%. Airbus winning one of the largest aviation deals in history today, signing orders for 430 jets with equity firm Indigo Partners. That deal worth $49.5 billion. It's expected to be finalized before the end of the year. And as a result, Airbus is up 2.33% right now. Kelly?
Shares of Target are headed the other way. They are down nearly 9%. They were more than that a moment ago on the back of a weak holiday forecast in their earnings this morning. Courtney Reagan has more. Court?
Hi there, Kelly. So Target actually beating across the board for the third quarter, beating profit by 5 cents for the quarter. So that 5-cent beat is then embedded in the full year guidance, which then makes the fourth quarter, the holiday quarter profit guidance a little cautious, although the comp sales there, that forecast is actually above consensus, but that seems to be what investors are focused on here today. So I asked CEO Brian Cornell if he's just being conservative or if he's seen something in the trends in early November that are making him cautious.
I'm actually surprised with the reaction. We had a really solid Q3. Traffic was up 1.4, our comps up 90 basis points, digital grew by 24%. So all the levers we look at working well. Our brands have been well received, our small stores off to a great start, our remodel stores like the one we're in today delivering exactly what we expected. And it's still early, we've got a lot of work to do, but we feel really good about our position as we go into the fourth quarter.
Comparable sales were twice as strong as analysts had expected, up for the second straight quarter. However, the online sales really responsible for almost all of that comparable sales strength again this quarter for Target. That is something that we've seen before, but some investors are concerned about that because Target's online sales make up under 5% of the total sales. So that's a point that many people are watching. Now, Cornell does say that sales, or stores rather, are still very important. They enable digital growth. In fact, almost half of online sales are touching the stores in some way, whether that's an order pickup or if that online order is actually being fulfilled from the store. So that's something that we're watching very closely. We know there's a number of new brands that Target's launched, including 4 in the fall. They said, Kelly, the Hearth and Hand collection from Chip and Joanna Gaines is actually amazing. That was the word that Cornell used to describe it so far with the shopper response. But holiday quarter is really a key, so there's a lot to watch here for the retailer. Back over to you guys.
Yeah, if I get in there, I'm going to boost their Q4 numbers myself with that collection. But Courtney, the interesting thing about his guidance, you know, and especially if he was going to mention the lower end of it, which is what the share price reaction seems to be, it's such a wide range. You could drive a truck through it. It seems to indicate, I mean, if they had to issue a very narrow guidance down at that, even at the bottom, it's not like the stock would have reacted worse, right?
You're right. So the guidance range is wide, so from $1.05 to $1.25, and consensus is sitting at $1.24. So it's in there, but of course that's at the higher end of that wide range. So that is some concern. The comparable sales forecast, however, does look like it's above the street. So maybe there's some concern that higher sales are coming at the cost of lower profit. We know that Target's making a lot of investments. They're paying their employees more in the stores. They're investing in digital. They're remodeling stores. These are all things that many analysts think that Target does need to do, but it does come at a cost.
All right, Courtney, thank you very much. See you later. Courtney Reagan there.
Thanks, Phil.
In
Thanks,
a Target store.
No comment on, are you excited about the Chip and Joanna
Well,
gains
I was just going to say, it's not surprising that they're seeing gains from the gains.
Oh.
I thank you for serving that up for me there. Low and outside,
Bertha played it best.
and I swung.
Bertha so far has played, but you got to go back and look at her Twitter history, see what I'm referring to. But that wasn't bad. But we have 40 minutes to go. It was kind of bad, but 38 minutes to go into the close. Dow is down just about 100 points there. We're looking to see if we have a rebound like we've seen. We're off the lows, but still kind of sitting weaker with the S&P down 9, the NASDAQ down 18, and the Russell down 3. Rupal Bansali of Ariel Investments has a new contrarian investment pick, and we'll find out what that is next.
Also, the Department of Justice is lining up new allies in its position against the proposed merger between Time Warner and AT&T. We'll tell you who they are and what it could mean for investors. Coming up.
The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips, you could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell, presented by National Stock Exchange in association with Fine Cure Pharmaceuticals, Escorts, and Vipa.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I trash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times, only on CNBC-TV18. Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
They're sharp. They help you get the maximum value for your money.
Target should be 2
I can hold on for the next 2 or
Growth
3
will be
years.
phenomenal.
Buy with a stop loss of
It is positive for the
It's a
stock.
marquee stock.
richly valued
I would
stock.
possibly wait for the next one.
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from S.P. Tulsian, Prakash Diwan and Ambrish Baliga every day on CNBC-TV18. CNBC-TV18 Market Wallas.
Clients point-wise, down 0.5% though right now. And in fact, that's the big loser today among the major averages. The S&P, the NASDAQ, the Russell down roughly a third of a percent or a little bit more.
Yeah, we're seeing stocks slide back the other way now with about 35 minutes to go. Joining us now with her thoughts on this market is Rupal Bansali. She's CIO and Portfolio Manager of Ariel Investments, International and Global Equity Strategies. And she joins us live from the Schwab Impact Conference out in Chicago. Rupal, it's great to see you again. And I'm just going to cut right to the chase here because I'd love to know what your best new idea is. I know they're typically contrarian ones in this market.
You're going to love this.
Well, I think the most contrarian thing that I can recommend today is to be in favor of cash as an asset class. I think that most people have overinvested in risky asset classes, whether it's high yield, whether it's equities, whether it's international equities, domestic equities, emerging market, doesn't matter. I think that people are too overweight risky asset classes, and they need to think about, doing the opposite. The contrarian trade is to be long cash.
Plenty of critics of the Federal Reserve would say that they've gone into those riskier assets because of the lower interest rates, the monetary policy that we've seen for the past decade or so. Do you agree with that? And do you think the tide is starting to turn now as the Fed does get ready to raise those rates again?
Absolutely. I think it's not just about the Fed raising rates. I think in general, we pay a lot of attention as value investors to valuations, and valuations are very risky, very rich. And valuation risk is a real risk. And I would say that's the reason to take risk off the table, not just what the Federal Reserve will or will not do.
Rupal, going to cash as a manager is an incredibly risky move. What happens if the yield curve doesn't invert for a year or two and the bull market doesn't end for a couple of years? Is this move going to just sit there while those gains continue to pile up?
Well, look, I'm not one to time the markets. It's a fool's errand. We all know that. But all our research shows us that valuations are very rich. And when that is the case, you want to make sure that you play defense, not offense. In investing, it's important to know when to hold and when to fold. And I would argue that cash has a legitimate role to play in an investment portfolio. Now, as contrarians, as unconventional thinkers, I'm not arguing that you should just cash up as in straight cash. The way to actually exercise that expression of being long cash is to own cash-rich companies. So by owning companies like a Microsoft, a China Mobile, who are very good equity stories to begin with, but because they have strong net cash balance sheets, you get a 2-for-1. So that's how I would express my views on cash, by owning cash-rich companies.
Aha. Now, what about dividend payers? In light of the GE dividend cut, everybody's looking at those sort of rich dividend yields, if you will, right now. Does any of that concern you? Is that attractive to you? How do you play those right now?
Well, I think dividends are always, cash in your hand is worth more than two in the bush. But that said, as again, fundamental investors, we do a lot of research as to whether the dividend is sustainable or not. And frankly, we knew that GE's dividend was not sustainable, so we've avoided owning the stock in our portfolios, for many years. So I think one has to do research. It's not just about looking at the headlines and figure out whether the dividend yield is sustainable or not. If you recall, a couple of years ago, before the financial crisis, a lot of people owned banking stocks because they seem to have high dividend yields, and yet those dividends got slashed, for a decade. Frankly,
right.
We still haven't seen the dividends go back up. So you've got to be careful. You cannot go by headline investing. You kind of got to do your research and figure out, which cash legitimately will come back to shareholders, whether in the form of dividends or share buybacks, like it could be in the case of a Microsoft, or it'll never come back to you because the cash does not belong to you in the first place. It's not enough to distribute because it's needed to reinvest in the business.
Rupal, I wanted to ask you, your overweightings, the biggest ones I can see in terms of sectors are in healthcare, tech, which you've mentioned there with Microsoft a couple times, and also telecom. Why is telecom such a big part of your fund? What do you see there?
Well, as I mentioned, we pay close attention to valuations, and we are also contrarian thinkers. Consumer staples as a sector is very much in favor and overvalued. We think telecommunications is the new staple. If you look at your smartphone, ask yourself, even if there's a recession, even if you lose your job, would you give up paying your monthly bill on your smartphone? I would argue that smartphones are actually more of a consumer staple today than shampoo. And so I would say telecoms as a sector trades at a huge discount to consumer staples in the market. And frankly, they also have great dividend yields, so you get 2-for-1. You get a great investment opportunity with recurring revenue streams, monthly subscription revenues, and yet you get the defensibility of the valuations in terms of high dividend yields. So that's why we are overweight.
Well, I think she's onto something because clearly I've used my smartphone more than I've used shampoo in the last several years. That's for sure. Rupal, good to see you. Thank you for joining us.
Thanks for having me.
Rupal Bensali from Ariel Investments.
I have two,
there.
by the way.
Really?
Yes.
No.
Yes.
I don't believe that. Time now for a CNBC News update with Sue Herrera. Hey, Sue.
Hello, guys. Here's what's happening at this hour, everyone. A group of female lawmakers introducing a bill to overhaul the harassment complaint process in Congress. This after some members have come forward with their own stories of harassment. It requires mandatory sexual harassment awareness training.
Congress should never be above the law. Congress should never play by its own set of rules. As elected officials, we should be held to the highest standards, not the lowest. This needs to change, and so we need accountability, and we need transparency, and we need this kind of reform, and we need it now.
Emergency crews battling a 5-alarm warehouse fire in South St. Louis. The fire caused part of that building to collapse, and at least one person was injured. Between 80 and 100 firefighters were on the scene. North Korean state TV showing photos of Kim Jong-un visiting a tractor factory and driving one of those tractors. He also toured various workshops within the facility. You are up to date. That's the news update at this hour. I'll send it back downtown to you, Bill. I'll look forward to seeing you tonight on Nightly Business Report.
As always, looking forward to it. See you then. Thanks, Sue. All right, the nose counting continues among the GOP on the Senate tax bill. Ilan Mui stepping in with the latest tally. What's going on, Ilan?
And Bill, Senator Ron Johnson of Wisconsin has become the first Republican senator to oppose the tax bill, telling Dow Jones that he is not going to vote for this tax package. That means Republicans can only lose one more senator and still pass this bill on the floor. Now, Senator Johnson had some concerns about pass-throughs versus corporations and how they're treated, but he's the first one to come out against it. Back over to you.
All right. Thank you, Ilan. Here's the president.
Participate in 3 formal state visits and attend 3 key regional summits. It was the longest visit to the region by an American president in more than a quarter of a century. Everywhere we went, our foreign hosts greeted the American delegation, myself included, with incredible warmth, hospitality, and most importantly, respect. And this great respect showed very well our country is further evidence that America's renewed confidence and standing in the world has never been stronger than it is right now. When we are confident in ourselves, our strength, our flag, our history, our values, other nations are confident in us. And when we treat our citizens with the respect they deserve, other countries treat America with the respect that our country so richly deserves. During our travels, this is exactly what the world saw: a strong, proud, and confident America. Today, I want to update the American people on the tremendous success of this trip and the progress we've made to advance American security and prosperity throughout the year. When I came into office, our country was faced with a series of growing dangers. These threats included rogue regimes pursuing deadly weapons, foreign powers challenging America's influence, the spread of the murderous terror group ISIS, and years of unfair trade practices that had dangerously depleted our manufacturing base and wiped out millions and millions of middle-class jobs. The challenges were inherited, and these products really showed what previous mistakes were made over many years and even decades by other administrations. Some of these mistakes were born of indifference and neglect, others from naive thinking and misguided judgment. In some cases, the negative influence of partisan politics and special interests was to blame. But the one common thread behind all of these problems was a failure to protect and promote the interests of the American people and American workers. Upon my inauguration, I pledged that we would rebuild America, restore its economic strength, and defend its national security. With this goal in mind, I vowed that we would reaffirm old alliances and form new friendships in pursuit of shared goals. Above all, I swore that in every decision, with every action, I would put the best interests of the American people first. Over the past 10 months, traveling across the globe and meeting with world leaders, that is exactly what I have done. Earlier this year in Saudi Arabia, I spoke to the leaders of more than 50 Arab and Muslim nations about our strategy to defeat terrorists by stripping them of financing, territory, and ideological support. And I urge the leaders to drive out the terrorists and extremists from their societies. Since that time, we have dealt ISIS one crushing defeat after another. In Israel, I reaffirmed the unbreakable bond between America and the Jewish state, and I met with leaders of the Palestinian Authority and initiated an effort to facilitate lasting peace between the Israelis and the Palestinians. In Brussels, I urged our NATO allies to do more to strengthen our crucial alliance and set the stage for significant increases in member contributions. Billions and billions of dollars are pouring in because of that initiative. NATO, believe me, is very happy with Donald Trump and what I did. In Warsaw, I declared to the world America's resolve to preserve and protect Western civilization and the values we hold so dear. In Rome, Sicily, Hamburg, and Paris, I strengthened our friendships with key allies to promote our shared interests of security and prosperity. In September, at the United Nations General Assembly in New York, I urged that the nations of the world join in confronting rogue regimes that threaten humanity and laid out a model for international cooperation grounded in respect for sovereignty and the responsibilities that come with it. On each trip, I have worked to advance American interests and leadership in the world. And to each of these places, I have carried our vision for a better, a vision for something stronger and sovereign, so important, sovereign and independent nations rooted in their histories, confident in their destinies, and cooperating together to advance their security, prosperity, and the noble cause of peace. It was this same vision that I carried to Asia 2 weeks ago. And it was this same commitment to you, the American people, that was always at the forefront of my mind and my thinking. Our trip was defined by 3 core goals. First, to unite the world against the nuclear menace posed by the North Korean regime, a threat that has increased steadily through many administrations and now requires urgent action. Second, to strengthen America's alliances and economic partnerships in a free and open Indo-Pacific, made up of thriving independent nations respectful of other countries and their own citizens, and safe from foreign domination and economic servitude. And third, to finally, after many years, insist on fair and reciprocal trade. Fair and reciprocal trade. So important. These 2 words, fairness and reciprocity, are an open invitation to every country that seeks to do business with the United States. And they are a firm warning to every country that cheats, breaks the rules, and engages in economic aggression like they've been doing in the past, especially in the recent past. That is why we have almost an $800 billion a year trade deficit with other nations. Unacceptable. We are going to start whittling that down, and as fast as possible. With these goals, it was my profound honor to travel on this journey as your representative. I explained to all of the world leaders and across Asia how well the United States is doing. Economic growth has been over 3% the last 2 quarters and is going higher. Unemployment is at its lowest level in 17 years. The stock market has gained trillions of dollars in value since my election and has reached record highs. We are massively increasing our military budget to historic levels. The House has just passed a nearly $700 billion defense package, and it could not come at a better time for our nation. Once again, our country is optimistic about the future, confident in our values, and proud of our history and a role in the world. I want to thank every citizen of this country for the part you have played in making this great American comeback possible. In Asia, our message was clear and well received. America is here to compete, to do business, and to defend our values and our security. We began our trip in Hawaii to pay our respects to brave American service members at Pearl Harbor and the United States Pacific Command, the guardian of our security and freedom across the Indo-Pacific region. As our country prepared to observe Veterans Day, we remembered the incredible sacrifices and courage of all of the veterans whose service has preserved our liberty and a way of life that is very special. We also thanked military families for their support for our brave servicemen and women. From Hawaii, we traveled to Japan, a crucial U.S. ally and partner in the region. Upon landing in Japan, my first act was to thank the American service members and Japanese self-defense forces who personify the strength of our enduring alliance. Prime Minister Abe and I agreed on our absolute determination to remain united to achieve the goal of denuclearized North Korea. Shortly following our visit, Japan announced additional sanctions on 35 North Korean entities and individuals. Japan also committed to shouldering more of the burden of our common defense by reimbursing costs borne by American taxpayers, as well as by making deep investments in Japan's own military. This will include purchases of U.S. advanced capabilities, from jet fighters to missile defense, systems worth many, many billions of dollars, and jobs for the American worker. Prime Minister and I also discussed ways we can deepen our trade relationship based on the core principles of fairness and reciprocity. I am pleased that since January of this year, Japanese companies have announced investments in the United States worth more than $8 billion, 17,000 jobs. Thank you. Oh, they don't have water. That's okay. What? Oh, it's okay. Oh. Japanese manufacturers, Toyota and Mazda, announced that they will be opening a new plant in the United States that will create 4,000 jobs. We also signed agreements between our nations to enhance infrastructure development, increase access to affordable energy, and advance our foreign policy goals through economic investment. From Japan, we traveled to another key American ally in Asia, the Republic of Korea. My official state visit to South Korea was the first by an American president in 25 years. Speaking before the National Assembly of the Republic of Korea, I spoke the truth about the evil crimes of the North Korean regime, and I made clear that we will not allow this twisted dictatorship to hold the world hostage to nuclear blackmail. I called on every nation, including China and Russia, to unite in isolating the North Korean regime, cutting off all ties of trade and commerce until it stops its dangerous provocation on, and this is the whole key to what we're doing, on denuclearization. We have to denuclearize North Korea. We have ended the failed strategy of strategic patience, and as a result, we have already seen important progress, including tough new sanctions from the UN Council. We have a Security Council that has been with us and just about with us from the beginning. South Korea agreed to harmonize sanctions and joined the United States in sanctioning additional rogue actors whose fund and funds have helped North Korea and North Korea's nuclear and ballistic missile programs. It's unacceptable to us. The United States welcomed the decision of President Moon to remove the payload restrictions on missiles to combat the North Korean threat. And together we reaffirmed our commitment to a campaign of maximum pressure. Like Japan, South Korea is increasing its defense contributions. During our meetings, President Moon acknowledged his desire for equitable cost sharing for the United States military forces stationed in South Korea. And I visited soldiers at Camp Humphreys, a brand new joint American-South Korean base paid for almost entirely by the South Korean government. At that base, I discussed with the United States and South Korean military leaders both military options and readiness to respond to North Korean provocation or offensive actions. During our visit, President Moon and I also discussed America's commitment to reducing our trade deficit with South Korea. At my discretion and direction, we are currently renegotiating the disastrous U.S.-Korea trade agreement signed under the previous administration. It has been a disaster for the United States. Last week, 42 South Korean companies announced their intent to invest in projects worth more than $17 billion in the United States, and 24 companies announced plans to purchase $58 billion in American goods and services. From South Korea, Melania and I traveled to China, where, as in Japan and South Korea, we were greatly honored by the splendor of our reception. Our trip included the first official dinner held for a foreign leader in the Forbidden City since the founding of the modern China, where we enjoyed a very productive evening hosted by President Xi and his wonderful wife, Madame Peng. During our visit, President Xi pledged to faithfully implement United Nations Security Council resolutions on North Korea and to use his great economic influence over the regime to achieve our common goal of a denuclearized Korean peninsula. President Xi recognizes that a nuclear North Korea is a grave threat to China, and we agree that we would not accept a so-called freeze-for-freeze agreement like those that have consistently failed in the past. We made that time is running out, and we made it clear, and all options remain on the table. I also had a very candid conversation with President Xi about the need to reduce our staggering trade deficit with China and for our trading relationship to be conducted on a truly fair and equitable basis. We can no longer tolerate unfair trading practices that steal American jobs, wealth, and intellectual property. The days of the United States being taken advantage of are over. In China, we also announced $250 billion worth in trade investment deals that will create jobs in the United States. From China, I flew to the city of Da Nang in Vietnam to attend the leaders' meeting for APEC, Asia-Pacific Economic Cooperation. There, I spoke to a major gathering of business leaders where I reminded the world of America's historic role in the Pacific as a force for freedom and for peace. Standing on this proud history, I offered our vision for robust trading relationships in which Indo-Pacific nations can all prosper and grow together. I announced that the United States is ready to make bilateral trade deals with any nation in the region that wants to be our partner in fair and reciprocal trade. We will never again turn a blind eye to trading abuses, to cheating, economic aggression, or anything else from countries that profess a belief in open trade but do not follow the rules or live by its principles themselves. No international trading organization can function if members are allowed to exploit the openness of others for unfair economic gain. Trade abuses harm the United States and its workers, but no more. No more. We will take every trade action necessary to achieve the fair and reciprocal treatment that the United States has offered to the rest of the world for decades. My message has resonated. The 21 APEC leaders, for the first time ever, recognize the importance of fair and reciprocal trade, recognize the need to address unfair trade practices, and acknowledge that the WTO is in strong need of reform. These leaders also noted that countries must do a better job following the rules to which they agree. I also made very clear that the United States will promote a free and open Indo-Pacific in which nations enjoy the independence and respect they deserve. In Vietnam, during a state visit in Hanoi, I also met with President Quan and Prime Minister Phuc to discuss the growing friendship between our countries. Our Vietnamese partners are taking new actions to enforce sanctions on North Korea. In addition, we committed to expand trade and investment between our countries, and we pledged to address the imbalances. I am particularly pleased that the United States and Vietnam recently announced $12 billion in commercial agreements, which will include $10 billion in U.S. content. Finally, I visited the Philippines, where I met with numerous world leaders at the U.S., ASEAN, and East Asia summits. At ASEAN, the Association of Southeast Asian Nations, we made it clear that no one owns the ocean. Freedom of navigation and overflight are critical to the security and prosperity of all nations. I also met with the prime ministers of India, Australia, and Japan to discuss our shared commitment to a free and open Indo-Pacific. During our visit, President Duarte of the Philippines thanked the American people and our armed forces for supporting the recent liberation of Marawi from ISIS. We pledged to strengthen and deepen our long-standing alliance. At the East Asia Summit, the United States negotiated and signed 4 important leader statements on the use of chemical weapons, money laundering, poverty alleviation, and countering terrorist propaganda and financing. And crucially, at both summits and throughout the trip, we asked all nations to support our campaign of maximum pressure for North Korean denuclearization. And they are responding by cutting trade with North Korea, restricting financial ties to the regime, and expelling North Korean diplomats and workers. Over the last 2 weeks, we have made historic strides in reasserting American leadership, restoring American security, and reawakening American confidence. Everywhere we went, I reaffirmed our vision for cooperation between proud, independent, and sovereign countries. And I made clear that the United States will be a reliable friend, a strong partner, and a powerful advocate for its own citizens. The momentum from our trip will launch us on our continued effort to accomplish the 3 core objectives I outlined: to unite the world against North Korean nuclear threat, to promote a free and open Indo-Pacific region, and to advance fair and reciprocal economic relations with our trading partners and allies in the region. We have established a new framework for trade that will ensure reciprocity through enforcement actions, reform of international organizations, and new fair trade deals that benefit the United States and our partners. And we have laid out a pathway toward peace and security in our world where sovereign nations can thrive, flourish, and prosper side by side. This is our beautiful vision for the future. This is a future where this vision, this dream, is only possible if America is strong, proud, and free. As long as we are true to ourselves, faithful to our founding, and loyal to our citizens, then there is no task too great, no dream too large, no goal beyond our reach. My fellow citizens, America is back, and the future has never looked brighter. Thank you, God bless you, and God bless the United States of America. Thank you very much. Thank you. Thank you all.
Should Roy Moore resign, Mr. President? Do you believe his accusers? Do you believe the accusers of Roy Moore, Mr. President? Should he resign?
President Trump not taking any of those shouted questions there as he finished up his statement about his trip to Asia, which he's just returned from. No word, though, on taxes, which we expect to hear the president hit tomorrow morning with House Republicans. Let's bring in Eamon Javers for more. Eamon?
Yeah, hi, Kelly. The president there using words like respect and strength and success to describe the tone of his trip to Asia, going through a travelogue, really, of all the different stops and the different agenda items that were ticked off in each of those locations. The president here very focused on the idea, as you heard at the end, America is back. And putting this in the context of his entire presidency and his goal to create jobs for American workers, listing all of the foreign trips that he's been on during the course of his presidency and some of the things he said in other countries, and also talking about the reception that he got in each of these countries. Clearly important to him that America is shown the respect that he believes it deserves on foreign soil. So the president here very much wanting to make this speech to talk directly to the American people about what he was doing overseas for all that time. And of course, the moment that will get a lot of attention there is the moment that harkens back to Marco Rubio on the campaign trail, pausing briefly twice there to reach for a sip of water. The president apparently a little bit dehydrated during the speech, and that's understandable. He just got off of a very long flight yesterday on Air Force One. So the president here recapping the highlights for us in the White House.
Eamon, everyone's going to jump on that moment, but I'm curious what you make of the fact.
Especially because the president, mocks Marco Rubio for that, right?
Oh, yeah.
So now he might have a little bit more empathy for Marco Rubio.
I see SNL's opening skit already, but back to the markets here. The Dow's down 130 points right now. The president didn't say anything just then about tax reform. He had the national audience. Of course, he'll have other opportunities to do so. Was that a missed opportunity?
Well, he did talk about the stock market, right? I mean, he's putting this in the context of some of the highlights of what he feels have been the successes of his administration. He's going to talk about tax reform tomorrow up on Capitol Hill, but that's going to be a speech aimed to his fellow Republicans in the House of Representatives. There, he's going to really urge them to come together and support this bill and get this over the finish line. And ironic here that you just had that report from our Elon Moy up on Capitol Hill just before the president talked about the first Republican senator to say he's not likely to vote for this, which gives the Republicans in the Senate a margin of just one senator now. Obviously, this is the beginning of a long negotiation. A lot of senators like to hold out the prospect that there are no vote here going into these negotiations to maybe get a little bit more. So we'll see where it all goes.
Yeah, we'll have more on that in a moment. Eamon, for now, thank you. Eamon Javers at the White House. Let's send it down to Bill with the closing countdown.
Yeah. And I've got Bob Pisani here with me as we head toward the close. And Bob, we were just saying, I mean, I asked the gang to show us a 3-day chart of the Dow where we saw on the open each day a sell-off and then a comeback of sorts. But today, a different story as we're heading back to the lows of the day. We're down 136 points right now.
Yeah, so 6 days in a row open down. And the good part is we've risen all 6 days in the middle of the day and ended higher. Today is slight reversal. We're not ending at the lows quite, but the market has drifted lower middle of the day, and I think that's got a few people wagging about whether or not that little extra push, that little willingness to buy on the dips may be evaporating a little bit. Again, we're only down 1% on the S&P from the highs, Bill.
And yields on the 10-year as well, drifting lower, narrowing that spread between the 2s and the 10s. First time we've seen that in about a decade. We got some earnings coming up in a little bit. Here's Cisco Systems will be reporting, among others, including L Brands. That'll be coming your way here on the second hour of the Closing Bell with Kelly Evans and Company. I'll see you tomorrow, Kel.
Closing Bell, everybody. I'm Kelly Evans, and not much of a rebound after all today on Wall Street. The Dow closing down 135 points. We were down 160 at the lows. Briefly, we're down less than 100 in the final hour, but turned lower again. That's a drop of more than 0.5%. Same was true for the S&P 500 today. Pretty much identical declines for all the major averages. Everybody, including the NASDAQ and the Russell, down about 0.5% today. It's the fourth in 5 days that the Dow and S&P have been lower. They're now on pace to close, or they did there, around a 3-week low. We have turned back the clocks for these major averages lately. We've got a pair of key earnings reports out after the bell shortly here. Cisco and L Brands will both turn in their results, and we'll bring them to you as soon as they are out. And a little notice provision in the Senate tax plan could have a big impact on institutional and retail investors. The CEO of Eaton Vance joins us with his take and what it could mean for your wallet coming up. Joining me on the panel today, CNBC senior markets commentator Michael Santoli is here, along with Neil Hennessy, portfolio manager and chief investment officer at Hennessy Funds. He actually joins us from the Schwab Impact Conference. And Dennis Berman is financial editor at the Wall Street Journal. He's made it down on set with us, Dennis, which we always appreciate.
Thank you. Nice to be here.
You're a busy guy. The biggest winner in the Dow today was General Electric, actually, coming off a deep 2-day drop, though. The biggest loser was Caterpillar. Over in the S&P, the biggest winner was Alaska Air, and the biggest loser was Target, down nearly 10% on the bell after its disappointing guidance this morning. The overall market seeing a pullback, with the volatility index hitting its highest since August today. Concerns about tax reform not helping market sentiment. The House is expected to vote on its bill tomorrow. And the Wall Street Journal just reported that GOP Senator Ron Johnson will be voting against the Senate plan. Mike, his beef apparently is that he says it unfairly benefits corporations more than other types of businesses.
Yes. Well, exactly. I mean, I think that the challenges to getting something impactful done in terms of a tax bill have been more front and center than the potential upside. That's been the case for the market for a while. Right now, I do think this shows you, though, it's raising the question of exactly how many other maneuvers are you going to pull or efforts are you going to strain for to get that 20% corporate rate. I mean, because that's what this whole process has largely been about. So you have at least one senator saying, you know, let's not play that game, and you're going to have to do it without me.
It's a big one, Dennis. And by the way, there was also a blow from the CEO Council last night when John Bussey asked the CEOs in the room how many people would increase investment if the tax deal does go through, and Gary Cohn said, where are all the hands?
I know, I was in the room. It was pretty interesting. The attitude of most CEOs is, I'm going to give my money back to my shareholders. I don't want to invest. But we also have to take into account, Kelly, the fact that optimism both at the small business level and at the big business level has relatively improved. It's pretty strong. So I think we have to give them a little bit of the doubt and say, well, maybe you don't want to be in a public forum and raising your hand, but, it nonetheless felt like an emotional moment.
The other interesting thing about this is that according to Bank of America Merrill Lynch, the equity investors actually think corporate balance sheets right now are over-leveraged. Yeah. By the highest number, basically, since they've been asking them about the survey, we're not in a recession. So their takeaway, Mike, is that investors don't actually want companies to do any more of this, giving the money back and doing buybacks, and the economics of it just don't make sense in this market. So you'd think if they got a benefit, they would do some kind of investment with it and not just return.
No, I think the way CEOs think about this is, look, if I have 12% after-tax profit margins right now, I could have decided to make that 11 and invested already. So clearly we didn't have projects that met our hurdle rate. I don't think you have a lot of CEOs sitting there saying, please just give me a little extra cash to plow into hard assets. The ones that need to do it and see the opportunity are already doing it.
Right, fair point. Neil, what do you think if tax reform does not get done here? What's that going to mean for the market and your investments?
Well, I just think corporations, if they're just going to hand it back to the shareholder, I think that's crazy, because they should risk some of it in trying to expand their business organically, because if they do that, that means their competitors have to do that. They don't have to spend all their savings if it comes down to a 20% level, Kelly, but if they can spend half of it and still have higher earnings than the year before, and if it doesn't work out, then you got future earnings just sitting on the sidelines. So it'd be crazy just to hand it back to the shareholder. But me personally, I just wait until the dust settles. I don't pay attention to anything. I wish they had just handled the corporate sector one way on the tax and the individual the other way on. Instead of combining them, it would have made life so much easier for all of us.
Right, but if it doesn't happen now, Neil, what's going to happen to the market? Or do you care if it happens or not?
I don't think it's going to. I don't think it's going to affect the market because actually I think the corporate tax is for sure going to get through. The perception is that the individuals are going to pay for the subsidies for the corporation. The real world is the middle class benefit from the tax cuts simply because stocks theoretically and most likely will soar as earnings continue to climb, and that hits their retirement accounts. The rich don't need an IRA. They don't need a pension profit share, but the middle class does. So if it's sold that way, I think we'll get the corporate tax through and the market will be off. If not, Kelly, it's not going to affect anything because corporate earnings are there.
Okay, fair point. And by the way, Senator Ron Johnson is going to be on Squawk Box tomorrow at 7:30. That's going to be an interesting one. Again, the first Republican to really come out and say he will not support the Senate tax bill. Real quick, what were you going to say on that, Dennis, real quick?
Well, if you attach, as has happened, if you attach the individual mandate question to the tax bill, you really start to add the volatility into this question. So I think the market's still saying it's going to happen, but I'd be curious what Mike thinks. Let's say a tax bill did not happen. It was a cratering like Obamacare repeal was. Yeah. Is the market down 10%?
No. No,
So
it's certainly not on 10%. It might be one of those excuses to say, okay, finally we need that pullback that we've gone, 400 days without or something like that.
Yeah. As we seem to be moving to more of a risk-off mode, Mike, you've also been flagging the moves in high-yield debt for the last week or so. And does that? There's telecom issues in there.
Yes.
This has also been a well-performing sector. But what do you think is going on?
Yes, definitely a lot of kind of mitigating factors to this move, but it's gotten a lot of attention. The fact that high-yield debt has really softened up. I always use it both on the upside and the downside to say, as a kind of a check on what the stock market is doing, is it confirmed by what the junk bond market is saying? And lately, this month in particular, high-yield debt spreads have moved up. That means that investors are taking on a little bit less risk. They're a little bit more wary of buying high-yield debt at low rates. But this puts it into perspective. This is a 5-year chart of the high-yield bond spread. So you see how much we spiked up there in late 2015, early 2016, came all the way down almost to the lows of this cycle.
Just the China spike?
That was the China oil crash the industrial earnings recession. It basically was that whole kind of compound calamity. So what we've had is all year, high yield was performing very well. People kind of flocking into it. That's been supporting equity valuations. So this little tick up from very low levels is not even at the level we saw in August and March. So it's something to watch, and just one more reason for a half step back from risk.
Is it a structural shift, Dennis, if the Senate bill is more punitive on limiting interest deductibility, and that hurts the debt that's out there, companies' ability to kind of borrow more and more? Is that part of what's going on here?
I believe it does. Obviously, the most highly levered companies have the most need for the most deductibility. But I think Mike's right. We've been boiling so long in this market, Kelly. We've been boiling so long. Oh, the high yield spread has moved 20 basis points, and we did a great story about it in the Journal. But again, you have to put it in relative perspective. Relative perspective, we are still near historically tight spreads.
Yes, and Neil, on that real quickly, when you look at the market overall, whether it's the credit or the equity side of it, do you disagree with those like Bill Gross, like our guest earlier, who were saying it's time to move to cash and this is a market top?
Well, since 2010, Kelly, I don't agree with them, first of all, but since 2010, we've had 14 market moves of 5% to 10% on the downside, with the average time frame being 16 days. And we had 4 time frames where from peak to trough, the market was down between 10 and 20%, and that was an average of 50 days. And the last time we saw something like that was 12% February of 2016. Yes, we're going to probably have a pullback, but will it ruin the bull market? No, because on each and every one of those 18 pullbacks, the market snapped back almost twice as quick as it went down and met new highs. And with corporate earnings where they are and where cash is and cash flow is, the market's going to continue to go. But people have to just be aware that these passive investments, they have to sell at the market, and once the selling starts in an ETF or an S&P 500 fund, it's going to get more selling. It's going to be quick and over.
That's true. We have seen sharp sell-offs and even sharper rebounds. Let's get over to Cisco earnings, which are just out. Josh Lipton has those numbers. Josh?
Kelly, Cisco reporting here, EPS of 61 cents. The street was looking for 60 cents. Revenue of $12.1 billion. The analysts had modeled $12.1 billion. Recurring revenue now 32% of total revenue. And turning to the guide, Kelly, Q2, Cisco is modeling EPS of between 58 and 60 cents at the midpoint. That's a penny above what analysts had been looking for. Cisco saying look for revenue growth of between 1% and 3%. In terms of product revenue performance, Kelly, Cisco saying that was led by security and applications, which increased 8% and 6% respectively. And remember, Cisco has some new reporting segments now. They have what they're calling their infrastructure platform segment, and that includes switching, routing, but also wireless and data center. They say infrastructure platforms revenue decreased by 4%. This call starts at 4:30 Eastern. Kelly, back to you.
Josh, thank you. And don't miss, by the way, an exclusive interview with Cisco CEO Chuck Robbins Friday at 9 a.m. on Squawk on the Street. Guys, Cisco shares are up nearly 4%.
Yeah, it seems like that slightly positive guidance, you know, for an uptick, probably with some relief. I think that people are bracing for some of those weaker sectors to maybe have continued weakness. In other words, telecom-related demand. So the absence of that kind of maybe due for a bounce. It has been kind of consolidating. The stock's gone sideways below its highs for a while now.
Yeah, that's a fair point. We're going to have more on Cisco coming up. We do have some breaking news on the Fed to get to here. Steve Leisman, what's happening?
Hey, Kelly, some comments from Boston Fed President Eric Rosengren saying that he supports gradual increases over the next several years. But other than that, a little more hawkish than he's been maybe in the past. He says the economy is past the point of maximum sustainable employment or unemployment. He sees low inflation being temporary, but low unemployment is going to be more persistent. He goes through a very sort of detailed look at what is permanent, what's temporary when it comes to inflation and unemployment. He sees unemployment falling below the 4% level, and he says that could boost pressure on inflation and on asset prices. He's been out there, a dove who turned rather hawkish, Kelly, as you know, and he's sort of ramping it up. And I think this is another sign of why markets should prepare for a December rate increase and start having that discussion about what happens next year and how many rate hikes there are.
All right, Steve, thank you. Dennis, what do you think?
Well, it was interesting at the Wall Street Journal CEO Council, both Cohen and Mnuchin talked about really trying to get wage growth going, and obviously Rosengren in a low unemployment environment that should be happening, but we simply have not seen it. And what the tax bill is trying to do is in a lot of ways encourage some of that wage growth.
Rosengren doesn't talk like he thinks something's broken there, though. It sounds like he's saying, oh, as unemployment goes below 4, we're going to see that pressure on wages, on inflation, and on
right. Cohen, though, talks like something's broken because the wage growth has been pretty tepid for a long time. It's just interesting to see how they're trying to turn the dials on that question. I think there are even in some ways much bigger economic forces at work here than even certainly the Fed itself and the fiscal Treasury or the fiscal IRS policy and the tax policy.
But there's huge implications, Neil. I mean, what do you think the Fed should do? Should they raise in December because unemployment's low and the stock market's high? Or should they wait because inflation and wages aren't there?
Well, I think everybody knows rates are going to go up. Do they have to go up in December? Maybe, maybe not. It doesn't really matter. Inflation's under control. One of the biggest things about the unemployment figure that people forget about is the contracts that are out there are not tied to inflation. So it's not like we were like in the early 80s where the contracts were one year after another. You went with the rate of inflation. It's no longer like that. So yes, wages will go up. You look at Target. Target's minimum now is $11. Everybody's starting to raise it because the workforce isn't really there. And so as we go forward, I don't think wage increases are going to give us inflation in any way, shape, or form.
Well, like you said, you still think the Fed's going. Others aren't so sure, and we'll find out ourselves in just a couple of weeks here. Neil Hennessy, Dennis Berman, thank you guys.
Thank you
very much for joining us here today.
Thank you.
Coming up, we've got more reaction to Cisco's earnings, including how you should be trading the Dow component following these results, with the shares up nearly 4%. But first, a little-known provision in the Senate tax plan could have a very big impact on how investors are taxed when they sell stocks. We have details on how much that could cost you in a moment. And we want to hear from you. You can contact the show on Twitter, Facebook, or over email. Share your thoughts with us. You're watching CNBC, first in business worldwide.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times. Only on CNBC-TV18.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I trash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18. The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips, you could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell, presented by National Stock Exchange in association with Fine Cure Pharmaceuticals, Escorts, and Bipa.
Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
They're sharp. They help you get the maximum value for your money.
Target should be 2
I can hold on for the next 2 or 3
will be
years.
phenomenal.
Buy with a stop loss of
It is positive for the
It's
stock.
a marquee stock.
Actually valued
I would
stock.
possibly wait for the next
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from S.P. Tulsian, Prakash Diwan and Ambrish Baliga. Every day on CNBC-TV18. CNBC-TV18 Market Wallas.
Wall Street, the Dow closed down 138 points. We are down 160 at the lows. 0.5% declines for all the major averages. S&P down 14, NASDAQ down 31, and the Russell down 7 today. A provision in the Senate tax plan could have a big impact on stock investors. Elon Moy has the details out of Washington. Elon?
Kelly, the proposal would limit the accounting methods that investors can use when they sell their stocks. So the rule would require them to follow first in, first out accounting, which restricts their ability to sort of package these stocks to maximize their gains or their losses. I spoke to one analyst who said that this could change the way that trillions of dollars in assets are managed. And that's why you see some big players like Vanguard getting worried that they're going to be hit. Now, the payoff for all the potential market disruption is not very big. The Joint Committee on Taxation estimates that this provision would only raise about $2.7 billion over a decade. Now, that is a drop in the bucket compared to the $1.5 trillion price tag of this tax plan. But this is just one example of the bitter fights that are going on over the guts of the tax bill. You saw today Ron Johnson becoming the first Republican senator to oppose the tax bill. He says that he's concerned about the way corporations versus pass-throughs are treated in the plan, and he's going to be on Squawk Box tomorrow morning at 7:30 so he can lay out all of his concerns straight from the horse's mouth. Back over to you guys.
Yeah, it'll be interesting to see the reaction to that throughout the evening. Elon, thank you very much. Our next guest can tell us about how the new rule will impact investors, both from an institutional and an individual point of view. Tom Faust is chairman and CEO of Eaton Vance. Ivory Johnson is founder of Delancey Wealth Management and a member of the CNBC Financial Advisor Council. Gentlemen, thank you both for being here. Tom, what kind of impact would this have?
Thank you, Kelly. We see 3 impacts. First, investors will pay more in taxes. Second, funds and fund managers will have less flexibility. Their hands will be tied in terms of how they manage their portfolio in a way that we think will damage returns not only for tax-paying investors, but also even for non-taxable investors. And third and finally, we think that the impact of this will include making markets less efficient, ironically imposing taxes as a greater factor in how investors and how portfolio managers make decisions about markets, which we think is exactly the wrong way to go. to try and promote, which is the to promote growth, which I know is the objective of this tax reform initiative.
Yeah, Tom, I mean, I was all set to get extremely riled up about this until I saw the number. It would raise $2.7 billion. That's it. We're talking about an industry with trillions and trillions of dollars, even on the individual side, in retirement assets and stock market assets. $2.7 billion is nothing. Is it really going to have that much of an impact?
Well, what we see is $2.7 billion is really being a drop in the bucket in terms of trying to pay for tax reform. But we see a very significant cost in connection with that small benefit in terms of paying for what's trying to be accomplished here. We see the cost here is not just the $2.7 billion that investors will pay, but what this does to markets, the impact not only on investors who are paying this tax, but also on other investors, and also on the ability of the markets to appropriately allocate capital and promote growth in the economy.
Ivory, what about you? What impact would you be seeing here?
Well, I think it's going to impact the ordinary investors. The fact is, wealthy investors can plan around after-tax investments that are subject to capital gains, but the ordinary investors, the smaller investors, will certainly see a bigger tax cut. Another thing people haven't considered is that when investors give money or stocks to charities, they tend to give the lower cost basis stocks to charities, and so this might impact charities as well, who save the government money because they're providing a need for people who are in need. And then also think about the robo-traders, right? So this is a disruptive technology who are touting themselves as doing tax harvesting. And so this is going to affect them and their ability to market, and you never want to have a disruptive technology mitigated by legislation.
Yeah, Ivory, it's a good point. I was thinking exactly of that, of all the robo-advisors are really selling their ability to have these tax loss harvesting engines and make a more efficient portfolio over time. Although I would wonder about the fact that there would be adjustments if, in fact, this ever became law. For example, wasn't shorting against the box a technique not that long ago that was restricted, and people have somehow found a way to make tax-efficient portfolios around that?
Oh, absolutely. I think that there are going to be some changes to the legislation. I'm interested to see what impact the $300 million that the securities and insurance industry spends lobbying will play in this. Are they in favor of thwarting their competition, or do they, or are they against the mutual funds in their portfolio, in their lineup, becoming less competitive?
Yeah, and Mike, my only thought when I saw that number too is they are shaking. They're looking for every coin under the couch cushion to try to pay for this thing.
Is exactly, I think, the inference that you come up with, right? I mean, and by the way, this was only taxes that were deferred otherwise, right? So they're kind of front-loading revenue to the government that, in theory, was going to be there at some point along the way.
We'll see if they bend on this like they have on some of the Silicon Valley stock options and other things. Tom and Ivory, thank you both very much for joining us.
Thank you.
Tom Faust and Ivory Johnson. Up next, we'll get analyst reaction to Cisco's earnings. It just crossed a couple of minutes ago. The stock's still up about 4%. We'll see whether you should buy what has been an underperforming Dow stock right now. Plus, shares of Papa John's slumping 14% since the pizza company's CEO blamed the NFL anthem controversy for slicing into its sales. Now the company is in full damage control, even issuing an apology. We'll have all those details coming up.
The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips, you could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell, presented by National Stock Exchange in association with Fine Cure Pharmaceuticals, Escorts, and BIPA.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I thrash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18. They're sharp. They help you get the maximum value for your money.
I can hold on for the next 2 or 3 years.
Phenomenal. Buy with a stop loss of
It is positive for the stock.
It's a marquee stock actually.
I would possibly wait for the next.
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from S.P. Tulsian, Prakash Diwan and Ambrish Baliga every day on CNBC-TV18. CNBC-TV18 Market Wallas. Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times. Only on CNBC-TV18.
It is a step in the right direction. I mean, they definitely have clear headwinds in terms of big ticket items on switching and networking, but you've seen a transition there, more of a subscription model, software approach. I mean, Rome's not built in a day. I mean,
even
this
for
is
a fundamentally hardware company?
Yeah, I mean, look, but they're starting to make that shift to a more software-centric model. That's been their playbook. And from an investor perspective, you didn't need a lot here to sort of get the bull case sort of going. And I think this is one, given the cash flow, given where they're positioned, I think it's one where that sort of transformation that's starting to happen, I think investors have something to hang their hat on here.
Eric, do you agree?
It's certainly encouraging. The reality is this is a company that's been in transition for a good couple of years under the management of Chuck Robbins. And we've had some mixed results. So I think they've made some management changes. I think this is certainly a good sign that maybe things are solidifying and maybe they can start moving forward and accelerating some of the growth, which has been lacking for a little while here.
Yeah, I mean, Dan, it's obviously been kind of stuck in this relatively slow organic growth mode. Do you think there's anything Cisco needs to do to more aggressively either change the portfolio, be a more aggressive acquirer? I know they've done some of that.
Yeah, I mean, you saw BroadSoft from an acquisition. But I do think organically is going to move the needle, but ultimately it probably is acquisitions. I mean, I'd expect them to make more significant acquisitions, specifically in security, in cloud. If you look at the transformation, you look at what Nadella has done at Microsoft, you know, what Hurd's doing at Oracle. I mean, right now, there's a window of opportunity for them to turn this around and make sure that they're not left behind on the cloud shift. That's going to be organic and acquisitions. But you look at these results, it's a step in the right direction, but it shows that the underlying factors there in cloud are starting to shift positive.
Eric, how much of a software company can Cisco ultimately be?
So they would like to get it to 50-ish% between software and services. Right now, specific to kind of the growth elements, which is the software components, it's only about 15% of revenues, which is their application software and their security software. So they can ramp that up in a meaningful way, and that would be critical for margins as well as for growth.
Yeah, they have a host of other issues to deal with. I'm sure we'll hear more about that on the call. We're going to hear from the CEO. Guys, thank you. Dan Ives, Eric Supiger. With the shares of nearly 4%, Cisco CEO Chuck Robbins will join the Squawk on the Street crew Friday at 9 a.m. on Squawk on the Street. L Brand's earnings are out. Let's get over to Seema Modi, who has that report. Seema?
Hi, Kelly. L Brand shares moving lower here after reporting an earnings that came in flat or in line with expectations. 30 cents adjusted revenue higher than what the street was expecting at $2.62 billion. Although in the press release, the company says for the third quarter, the exit of the swim and apparel categories had a negative impact of about 2 percentage points to both the total company and Victoria's Secret comp sales. L Brand shares down now more than 5%. Let's switch over to the upscale furniture seller Restoration Hardware, which really has been focused on streamlining its inventory operations this year. The company raising its guidance, its Q3 guidance. You can see the stock is up more than 12%, building on off of what is already a stock up about 170% here in 2017, a big winner. Lastly, in the tech space, NetApp reporting better than expected earnings, 81 cents adjusted, strong beat. The analyst consensus was for 69 cents. Revenue at $1.42 billion. That too came in higher than what was expected. Guidance also strong, and that stock up nearly 7%. Kelly?
Thank you very much, Seema. Mike, some big movers there, especially RH.
Yeah, Restoration Hardware is a fascinating story. Still have a huge contingent of short sellers who think that basically the strategy is a mess, but they did this enormous leverage buyback. So it's essentially a direct tug of war between the CEO and the shorts, and you see they actually had good enough results for another pop today.
And I think RH was one of Bill Miller's investments, which just adds to the
believe
crazy
that's right.
year.
Oh yeah, he's more than willing to stand in front of the assembled short sellers on a risky stock with an aggressive balance sheet and say, I see something there.
Yeah, we'll keep an eye on that one. Also.
And L Brands, I mean, stock had been up from like 39 to 47 since August, so it had this move. I think it's going to be about the outlook, obviously, for the next 3 months.
Its 52-week range, it was up at 75.
Oh yeah, it's had this kind of stair step down.
Yeah, all over the place. Those shares, as you mentioned, down more than 5% right now after their report. Time now for a CNBC News update. Let's get over to Sue Herrera. Sue?
Hello, Kelly. Hello, everyone. Here's what's happening at this hour. Investigators have found another victim from the deadly shooting spree in Northern California, the gunman's wife. Her body was hidden in the home. They believe she was the first victim of the shooter. You see his picture there. He's been identified as Kevin Neal.
He had literally cut a hole in his floor. We're confident that he murdered her, shot her at some point, probably late Monday, and literally just put her body in the floor and covered it up.
A massive pileup on a highway in China, killing at least 18 people. Another 20 people were injured. Officials say more than 30 cars were involved. It began when a car crashed into a bus and hit the oil tank on the bus, which sparked a huge explosion. And for the first time ever, scientists have tried gene editing inside the body to cure a disease. The experiment was done earlier this week in California on a 44-year-old man with a rare metabolic disease. The patient received billions of copies of a corrective gene intravenously to permanently alter his DNA. Signs of it working could come in about a month. So we're going to keep track of that story, and we wish him all the best of luck. That is the CNBC News Update, Kelly. I'll send it back downtown to you.
I was going to wish you a happy birthday, but after that news update, I'm not feeling so happy. So.
Thanks, Kelly. I appreciate it. I know there was a kind of grim news today, unfortunately.
So anyway, you have a happy birthday.
Thank you so much. I appreciate it.
As always. Sue Herrera. Let's take a look at how we finished the day on Wall Street. It was red across the board. Dow down 138, S&P down about 14, the Nasdaq down 31, the Russell down 7. Everyone was down about 0.5% today. One of the deeper sell-offs we've seen in this kind of trip that the markets have been on for several sessions now. Let's get to some of the other big stories of the day in our rapid recap.
The purpose of this is to cut taxes for everybody. And so we want to keep doing that. And we know that this SALT fix is really necessary to make sure that that's the case. So yes, that is one of the bottom lines for the House.
The DOJ staff has been approaching state attorneys general. This is fairly typical. In this case, what we're hearing at least is that while approaching a number of state AGs, perhaps as many as 19 or 20 of them, they've gotten very few of them at this point to sign on to the complaint.
Stores still matter. They're still going to generate the majority of retail sales for years to come. Our new brands have been incredibly well received. It was just a couple of days ago that we introduced Hearth and Hand, our collaboration with Chip and Joe. And the reaction across the country has been amazing. It's driving traffic to our stores, visits to our site.
The head of the CFPB, Richard Cordray, basically has sent out an email saying it is his intention to resign as head of that office by the end of the month.
I think other global markets are more appropriately and fundamentally valued. I think the U.S. is ahead of the pack, so to speak. And again, not that things are going to go down precipitously, but I think we're basically at a peak.
And then just before the market closed, Mike, word that Senator Ron Johnson will oppose the Senate tax bill. Do you think that's why we're down 138 here?
I don't really. I mean, we were down 160 on the Dow both today and yesterday in the morning, and you kind of clawed your way back. I think it's been a global kind of risk-off move. I keep pointing out Japan's down 6% from the highs. You know, Europe's down 4.5% from the recent highs in the last couple of weeks. Ron Johnson of Ohio has nothing to do with that.
Well, when you put it that way, it's a fair point. All right, time now for the takeaway. Today, it's a streaming version of it, and we begin with Amazon dropping its plans to create a skinny TV bundle, according to Reuters. Amazon said they couldn't get enough profit or networks to sign on. They even concluded that, quote, it's not necessarily the direction the TV business will eventually go. Now, that's especially interesting, given that a skinny bundle, I think, is it Philo or Philo, launched today with non-sports entertainment offerings from Scripps, Discovery, and others. So who's got this model right?
I was going Philo. I think you and I can just decide what it's going to be called right here. I don't know that either one has it right or wrong, but it just shows you that everyone's kind of experimenting with what the right mix is going to be and the right pricing. I mean, Amazon, by saying, look, we're not really clear that a new bundle is the way it's going to go, there's plausibility in that because maybe people can just do it a la carte, right? You can kind of shop on Amazon's platform.
The way they
for
offer
things
movies now. You just pick the one you want. It's $1 a piece.
On the other hand, this Philo, if that's what it is, people criticized it for being priced too aggressively. $16 for a lot of non-sports bundle. That's not the net cost of those channels. So in other words, if you just passed along what the cost of those networks is, it would probably be under 10.
Wow.
So they're trying to build in some profit as opposed to do it cheap and build scale.
We'll see if they're forced to go the other way. Next, here's what Amazon does like, a Sports Illustrated TV channel, apparently. Time is launching the service for $4.99 a month through Amazon channels. It's aimed at sports lovers and will offer studio shows, movies, and documentaries. Is this an ESPN killer?
No, but I do think it's a relatively, shrewd, I think also low risk way to kind of ape what ESPN has, and not just ESPN. I mean, remember Barstool Sports was getting in bed with ESPN. Now they're doing their own kind of streaming network or online network. And I think it's an extension of the fact that every publishing site has become video. I mean, video is where all the ads are because that's where the ad demand is. Yeah. So it does make sense. Obviously, it's not going to be kind of, live sports. But it makes sense. I do think the SI brand still has some value. They can tell some stories.
We'll wait to see if there's any swimsuit.
You would imagine they might make use of that in the slow months of the winter.
Finally, Hulu is being offered for free to Sprint Unlimited Freedom customers. It's going to have limited commercials. Hulu will also reportedly get a cut of Sprint subscriber revenue per month. A couple things. T-Mo already did this with Netflix. Can Sprint's network handle all this extra streaming now? And what's your takeaway from them doing this partnership?
No idea if the network can handle it. A lot of criticism how much more investment there has to be in the network. They can obviously kind of modulate the quality and the volume that runs through there. It's another reminder that what these wireless companies are, whether it's AT&T, Verizon, Sprint, or T-Mobile, they're just data clearinghouses, and all they need is to find new ways to maximize the data load on those networks so that they can sell it to you. Even if it's unlimited, there's always caps. So it makes a lot of sense, but I think it shows you that that's kind of just the table stakes now. You have to have something content-oriented.
And if you're going to offer it, why not own it? I mean, not
at some
specifically
point,
in that case, people can understand if that's the AT&T.
I don't think Hulu's for sale right now, at least not to an outsider.
But all of a sudden, if you could pick up a sports, if you throw some kind of content out there.
And you see the Verizon approach, right? Kind of cobble some stuff together.
Exactly.
At Yahoo.
Anyway, a lot of changes underway across that whole sector. Papa John's has a problem on its hands. The pizza company is doing an about-face after blaming the NFL's anthem controversy for sliding sales. Details on an apology up next. And we're keeping a close eye on all these after-hours earnings movers. There are some big ones. RH still up more than 13%. NetApp up 7%. Cisco up nearly 4%.
They're sharp. They help you get the maximum value for your money.
I can hold on for the next 2 or 3 years.
Phenomenal. Buy with a stop loss of
it is positive for the stock.
It's a marquee stock actually.
I would possibly wait for the next
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from S.P. Tulsian, Prakash Diwan and Ambrish Baliga every day on CNBC-TV18. CNBC-TV18 Market Wallas.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I trash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18. The clock is ticking and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips, you could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell, presented by National Stock Exchange in association with Fine Cure Pharmaceuticals, Escorts, and Biba.
Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times, only on CNBC-TV18.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity markets and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times, only on CNBC-TV18.
Commodity Champions, brought to you by Nakshatra Diamond Jewelry.
We believe in the right to protest inequality and support the players' movement to create a new platform for change. We also believe together as Americans we should honor our anthem. There is a way to do both. The company also said it would, quote, work with the players and league to find a positive way forward. They're open to ideas from all except neo-Nazis, and they even included the middle finger emoji, once again rejecting support from hate groups that defended Schnatter's comments. Now, his comments on November 1st, they did have a big impact on the already struggling stock. Papa John's is down some 14% since October 31st. That is the day before the call. On that day, it lost 8.5%. That was its worst day in about 2 years, falling as much as 12% at some points intraday. For the year, Papa John's is also down more than 30%, while its pizza competitors are faring much better. Domino's, for example, is up by around 10% for the year to date, and Yum Brands, which of course owns Pizza Hut, is up about 25% for the year. Pizza Hut and Domino's did not cite any impact from the NFL player protest on their bottom lines. Kelly, back over to you.
Thank you, Kate. What a saga. Kate Rogers. Speaking of sagas, Bitcoin's wild swing continues. It climbed higher today on news that payment company Square is testing it on its Cash App. We're going to hear from the Square CFO coming up. And today on Fast Money, the father of high-speed trading has a major warning about Bitcoin. More Closing Bell right after this.
The truth is never simple, but dig for truth we must, especially when it comes to our cities and our lives. Join me every week as I trash out the big urban issues and all the noise surrounding real estate. From traffic nightmares to metro connectivity, from affordable homes to smart cities.
The Urban Reality with Manisha Natarajan. At these times, only on CNBC-TV18. Class, speed, raw power, max torque. Get ready for an unmatched automotive experience. Servo presents Overdrive.
Overdrive, presented by Servo, world-class lubricants from Indian Oil.
The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips. You could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell, presented by National Stock Exchange in association with Fine Cure Pharmaceuticals, Escorts, and Biba.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times only on CNBC-TV18.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times only on CNBC-TV18.
Commodity Champions, brought to you by Nakshatra Diamond Jewelry.
From identifying the movers and shakers of the week to spotting new trends as they develop, we get you all the buzz in the commodity market and help you connect commodity to the company. Let the biggest champions guide your investments and find out on what to expect in the week ahead.
The Commodity Champions. At these times only on CNBC-TV18.
Commodity Champions, brought to you by Nakshatra Diamond Jewelry.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times only on CNBC-TV18. The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips. You could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell, presented by National Stock Exchange in association with Fine Cure Pharmaceuticals, Escorts, and Biba.
They're sharp. They help you get the maximum value for your money.
Target should be 2
I can hold on for the next
Growth
will be phenomenal.
Buy with a stop loss of
It is positive for the It's stock. a marquee stock.
Richly valued
I would
stock.
possibly wait for the next
Definitely buy it.
And they are the superheroes of the stock market. Get timeless investing advice from SP Tulsian, Prakash Diwan and Ambrish Baliga every day on CNBC-TV18. CNBC-TV18 Market Wallas.
A really dumb investment. When I was on Happy Days, finally starting to make some cash, I actually got talked into investing in super cow embryos that would yield cows that would yield a lot of milk.
No, you didn't.
We were going to get rich.
No.
Not $1.
Okay, we've heard a lot of celebrity money mistakes, including some weird ones, here on The Closing Bell. Today, we're joined by someone who manages wealth for a number of athletes and celebrities, like actress Fran Drescher. And they're both here to discuss some of the biggest mistakes people make when giving to charity. Thank you both for being here.
You're welcome. Thank you for having us.
So what, did you make a mistake first and then learn from it, Fran, or what's going on here?
No, I think for me personally, I think that the only mistake that people make is when they're not true to their heart and they don't follow their guts and, you know, they don't make ethics and principle their guiding light. And that's the only thing. I think all too often, you know, we make money the priority and we don't really think about what's of true value. Sure. So as long as you make that your guide, and, you know, we both are kind of on the same page about that. She understands that that's where I'm coming from. Yeah. Then, you know, it's a good marriage, because I think that we have to think in terms